I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right. EdgeFinder
Yeah,
Mobile.
yeah. That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right. EdgeFinder
Yeah,
Mobile.
yeah. That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right. EdgeFinder
Yeah,
Mobile.
yeah. That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that.
Attention A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys. Welcome back to another live stream. Hold on. Let me fix my lighting. Temperature. That should be good. I got to make sure I appear bright white. Good morning, everybody. Thanks for being back with me on a live stream. We were live all day yesterday. It was a crazy long stream yesterday. Hold on, let me get my intro music playing. Here we go. All right. Today's Thursday. Yesterday was a bomb drop of a day in terms of stuff that happened. You had Jerome Powell coming out really dovish, signaling that September is likely going to be the first cut. But I wanted to discuss that a little bit about where, as well as where I'm positioned, about where I think things are going. You know, what am I watching? Am I buying gold? Am I selling gold? Am I buying the NASDAQ? Am I staying in the trade? Also, yesterday, if you enjoyed the show, we were live for a record-breaking 7 hours and like 20 minutes, so something crazy. We were live streaming yesterday from the beginning of the day around when I got into the office. I usually get in about 7:30, 7:45. We went live at 8:15, and we stayed live until like 3:30. It's crazy. We had guests from all over the world taking over the show. I just love it. I love it because, I'm sitting there, I'm doing other things, and then I'd pull up the live stream. The live stream has still gone on for another couple hours with other great guests, and it's just very cool to watch. Hope you guys enjoyed it as well. And Liam says he's up 180% plus profit so far this week. Liam, I am very excited for you, but I'd also just encourage you to put it this way. Yesterday, I was up like 3.8%, and I'm considering reducing my position size because that's too much. As much as I love being up 3.8%, I also know that being down, 3.8% is possible if I have a losing streak. So reducing position size is actually something I'm considering doing today. I may have been a slightly tidbit too heavy. In fact, I don't ever get into margin trading on my account, but I am actually floating a little bit of used margin accidentally. So my position sizing may be just slightly too big. So today I am actually considering not like closing a position, but reducing the number of shares that I have open in some of my trades. So I'm not taking profits. I'm not looking to take profits. What I'm saying is I just think that I'm dabbling accidentally into margin just a slight bit. This is just a tiny bit of margin in my account, but I don't like having any margin. I usually, in fact, I prefer to have a little bit cash in the account. If you don't know what this means, by the way, the cash balance, because I trade on a stock brokerage, I trade on a margin stock brokerage account. And what this means is that if this number is positive, it means you have just like unused cash sitting in your account. And if this number is negative, it means you're dabbling into borrowed cash, which I absolutely do not need any borrowed cash. That's why I don't personally trade with funding programs. That's why I don't, my account size is fortunately large enough where I don't need to borrow anybody else's money. So I do think I'm going to probably reduce position size just on something today. However, there's a lot of stuff that I want to discuss today. Today is going to be a recap day for the ages because we've got so much stuff. I'm going to be putting a video out today. 2 days without an upload, man, it's like nostalgic for me. Even though I spent, a couple hours on camera yesterday, it's nostalgic to think I'm going to be making a video today. I missed it. 2 days. That's like the longest video break I've gone in like years, not making a video. Okay, so the Dow Jones, still a very bullish reading. So I'm going to stay long that. No problems there. But we've got a lot of charts to look at on the EdgeFinder. I'm not sure what's going on with the EdgeFinder. Just got to load. I'm just going to restart it. Okay, so I'm going to remove minor currency pairs, and I'm going to remove neutral readings. And here is our current watch list. Let's take a look. So yesterday, let's first kind of break down what the theme of yesterday was. Yesterday during the press conference, we got a lot of intel from Jerome Powell. A couple notable things. In fact, I did a tweet about this, so let me just pull up Twitter. Hold on. I wrote this at 6 a.m. this morning, so let's see my 6 a.m. thoughts really quick. All right. So I did this this morning. Just broke down my thoughts. So let's start today's analysis with this. So I mentioned yesterday, or I mentioned this morning about yesterday's press conference with Jerome Powell. I said Powell expressing an obvious willingness to cut interest rates in September, like markets had anticipated, was a big deal. But it wasn't about September at all. Why? Because expressing a strong willingness to cut in September suggests a possible willingness to also cut in November, December. So yesterday, people were like, the more USD bull people, the USD really bullish people, they would say, well, he said, yeah, we're going to probably cut in September as long as things keep going the same way they're going. But he didn't say anything about the other ones. But you have to think about this. You have to read between the lines when it comes to Fed speak, because Powell is never going to say explicitly, we are going to be cutting rates in September definitively, because he himself always points out that this is not a game of certainties, that the Fed is doing the best with what they have in front of them in terms of the economic data. They're making the best decisions they can, but nothing is certain. So his very strong willingness to cut in September is about as close as you're going to get to Powell saying we're going to cut in September. He's not going to say that. He's never going to say that. His job is too open-ended in terms of the economic data to say outright, we're going to cut interest rates in September. He's not going to say that. He'll say something like, consensus is we will probably cut in September unless something changes. That's about as close to we're going to cut in September as you're going to possibly get. So the expectations is that, yes, we are going to get an interest rate cut in September. The market expected that, and the market was right in its anticipation, because Powell came out and basically said that is the likely scenario. Now, he didn't have to say that. He didn't have to cue to the market that September is very likely to be an interest rate cut. He could have come out swinging. He could have come out saying, September is on the table or up for discussion, but there's some things that are really holding us back. Instead, he came out way more dovish than that. He came out saying September is the likely scenario. He also mentioned that we've made substantial progress, that the risks are balanced between both sides of the mandate, saying things like jobs, the job market is now a core concern of theirs as well, whereas inflation used to be the only main concern for them. Right, because inflation went up to 9%, so they obviously tilted their weighting of the mandate towards the inflation part. But now that inflation has cooled off a little bit and seems to be making serious progress, as he pointed to many different things in his presentation about the data, he said inflation's really shown a path towards steady disinflation. He was dovish yesterday, and to add to that, okay, so he's willing to cut interest rates in September. But it wasn't about September at all. The market already knew that. His willingness, his language about, yes, very likely we are going to cut in September. He didn't say we're going to. He said, right now, consensus is pretty appropriate to cut in September. That yielding of the question at all about whether September was likely going to be a cut, it suggests, more importantly, that September is it's not about September at all. It's about November and December. Because if he's very willing to cut in September, there's a lot higher likelihood, if he's not pushing back at all on September, there's a higher likelihood that he's going to cut in November and or December. Does that make sense, guys? We got news coming out. I know we got claims coming out. So claims could move the market a little bit. You got about 10 seconds to go. So let's check that out really quick. So hold on. All right, claims coming out here in just a moment. Dollar index still holding that 104 level. All right, claims came in higher than expected. Dollar bearish. Yep. So the dollar just slightly lower here off of this weekly claims that just came out. 249,000 people filed for unemployment relative to 236,000 forecasted. That is another tick for the dollar bears, because this is showing continued slowing in the labor market. Another likely cue that rate cuts are coming. So again, there's a lot of people on socials right now, and this is where you have to be careful, guys. You've seen me. If you've watched my content for the last few years, You've seen me be very dollar bullish. You've seen me be very dollar bearish. In my opinion, in the last few months, I've been pretty correct in being on the bearish side of the dollar. Why? Because the data is pointing to it, right? The data leans weak for the US dollar. Today's data that just came out was another tick for the bears. And here's the thing. So again, I just want to make sure that we get this together as a group. Jerome Powell yesterday, his signaling about September to the market was not about September at all. It was about November and December. If he's very willing to cut September, there's a higher chance, not a certainty, a higher chance that there will be also another cut or maybe two cuts to follow in November and or in December. Does that make sense? Can you guys do me a big favor? If that made sense, hit the thumbs up button on the stream. Appreciate you guys for being here. Happy Thursday. Do you have a Telegram group? Yes, we do. We'll drop the link to the Telegram. It is free to join if you want to keep up to date with Frank and I's analysis. Frank does a lot of our readable content. I do a lot of the video content. We're a team here at A1. We put together a lot of content together. So if you're not already in the Telegram, it is free to join. We'll drop the link there in the chat. Boom, there it is. Producer just had it dropped for you. So there you go. So anyways, that's the thought for me. When we look at this market and we say, are cuts coming? I would say the data suggests yes. There's gold moving up on this as well. So where does that leave me? Where am I positioned because of this? All of these opinions and biases that I'm talking about, where am I positioned? Well, I'm long the NASDAQ, I'm long the Dow Jones, and I'm long semiconductors. Three areas, three stock index. I'm very long indices right now. In fact, that's my only positions. I don't have any gold. I don't have any other positions. It is literally long indices for me right now. With this recent pullback, I allocated my full account to three different parts of the market that I think could do well in a rate cut environment. There's one additional area that I want to get long, which is the Russell. Look at this beautiful chart. This is small cap to mid cap companies in the US. I think that they stand to gain a lot from rate cuts as well. A potential reacceleration in growth, lower borrowing costs. A lot of them are financial companies. The Russell could do very well and perhaps could make it back to all-time highs if we see rate cuts really on the table. Right? All-time highs are over here. We have not had, although the other indices have crossed all over across their all-time highs many, many times, the Russell still has not. So I think this one has room for a catch-up trade. I like the idea of either a break and retest of this area. So let's just map this out. For the Russell trade idea that I have, I'd like to either see this kind of move, a break and retest. Yesterday, we tried to close above, failed out a little bit. So that's a little bit concerning. But if we get a big break above today, a pullback, perhaps that sets up for a Friday, buy the retracement setup for me. Or if we get a deeper pullback, I'm also interested in potentially playing the Russell on the long side. But I am bullish on pretty much all indices right now until something changes. I'm also bullish on gold. In fact, gold had a nice little breakout here this morning. Look at this. So the daily chart, we broke through this level here, heading back to looks like maybe retest the all-time nominal high for gold. So I'd be interested to either see something like this or something like this. Both scenario, I am bullish on gold. Hey, Nick, I think we're entering into a recession. Let's think about that for a second. Are we entering into a recession? Because if I thought we were entering a recession, you would not catch me saying I'm very bullish on indices. So I don't think we're entering into a recession right now. Something could change to show us that. But let's think about this for a second. GDP growth has still been pretty strong. So economic output is growing in the US. Services PMI has come under the growth level a little bit, but it's not crashing. Manufacturing PMI has been consistently below growth. So not particularly optimistic there. I'm not sure why manufacturing PMI is giving us there it is. Manufacturing PMI, again, below 50, remember, shows decline. So some decline in the manufacturing, but not crashing. Retail sales has been very slow, not very impressive. The consumer definitely feeling a pinch. I think that if you're going to make the case for a recession, the best case you could make is that the consumer is feeling the effects of inflation. That is true. But if they cut rates and it stimulates growth again, the consumer might come right out of that slump and go back into a positive spot. So NFP, so jobs growth is not terrible, right? It's slowed from where it has been, but I want to show you something else about jobs data in just a moment. We had ADP came in light. Unemployment claims continue to rise. We'll get the latest data point once it updates on the EdgeFinder from today's report. Job openings continue to slow, but here's what I want to show you on job openings, something very key here, okay? We're not in a recessionary level of job openings. We're normalizing back down to where we were pre-pandemic, okay? Take a look at this. This is like when the pandemic, in fact, let's put some dates on this, right? So this is 2019 levels, right? 2019 levels are right around here. So we're coming down towards about where pre-pandemic levels were. And pre-pandemic, the economy was not in a recession, right? So job openings are slowing, but if we get rate cuts, this very well could round out or even start to climb again. So I don't see the recession call making a lot of sense just yet. You might say, well, look, unemployment rate is rising. That's going to lead us into a recession. Well, it could if the Fed doesn't cut rates in the next couple of months, which could help to, slow that rise. Also, it's rising very slowly off of historically very low levels of unemployment. Wage growth, people are getting wage increases, although that's come down a little bit as the Fed has kind of kept interest rates high for a suspended period of time. That's slowing the wage growth concept, which has been helping with inflation. So when I look at all this, I say, okay, do I see a recession coming? No, I see a lot of progress. I see inflation is cooling, right? Here's the inflation chart. And again, I just want to mention, if you're liking what you're seeing here, the EdgeFinder is our #1 selling tool for a reason. If you're looking to get into the fundamental analysis side of trading, if this is resonating with you, if you're like, this makes a lot more sense than just staring at squiggly lines and charts all the time, then I would encourage you to get a copy of this tool. The sale is ending. We are actually ending the sale tomorrow. We're doing a 55% off summer sale. It's our biggest sale of the year, and that sale is ending soon. So don't miss out on that. Anyways, if you'd like information about the sale, I don't think we have anybody just inside of the office just yet to answer questions, but here's how you can get access to the sale. I'll just drop the link. So it's hold on. Okay, hold on. All right, here you go. It's in the chat right now. If you want to get access to the EdgeFinder for half off, use code YTLive. And if that doesn't work, use code YTVIP. One of those two codes will work to get you half off the discount, or half off the EdgeFinder while the discount lasts. So anyways, back to my concepts here. Again, inflation trending lower, went sideways, starting to trend lower again. To me, I don't see recession as a base case. I see recession as a possibility always, but not the base case. Right now, it looks like the market has room to run. And with this recent dip, I'm positioned long. And if I'm wrong about this idea, if we completely erase and start to crash down lower, if earnings come out poor, if something, we do have a huge earnings day today, by the way. We have Apple and Amazon reporting their earnings after the closing bell today. Okay, I have some questions in the chat. Sorry, let me take a look at these. Harry says, does the EdgeFinder's top setups page take into account forecasted results of economic news, i.e. would forecasted rate cuts impact the overall bearish/bullish score of a pair/asset? Harry, that's a great question. And, we have actually considered making some adjustments to be more on the forecast side, but let me show you what we actually do methodically. What we look at is our team of developers here at A1. There's 3 of us, myself, Frank, and another gentleman that helps us out on the dev side. Our general way we score data is we have we've mapped out the forecasts and the actual numbers for each one of these economic statistics. So for example, we'll take a look at GDP stats. We'll take a look at the forecasted values, and then we'll look at the actuals. And if the actual values are beating estimates, we give it a bullish reading. If it's missing estimates, we give it a bearish reading, right? For the underlying chart. So for example, GDP beat out of the US, that gave a +1 scoring to the Dow Jones. Does that make sense? So we're always looking at the forecasted values versus the actual ones that come out. And that gives us a nice idea of whether or not the market is upbeat about certain statistics that are coming out or bummed out about statistics that are coming out. I hope that makes sense. But yeah, very good question. And you've heat-seeked exactly into the way that we've thought about scoring the system that we use every day to find the setups we trade. So again, EdgeFinder has come a very long way. If you're just kind of tuning into the content, if you're new to this stuff, then you've missed a lot of episodes of getting the EdgeFinder to where it is. And it's really improved over the last few years. We started developing this in, I want to say like late 2021. I started really thinking through what I wanted to build with this thing. And then the product became live in 2022. So we've been doing this for a couple of years now. Will the EdgeFinder help my bad hairline? That's a great question. And I don't think it can help you with that, but it certainly can help you with looking at market data. No problem, Harry. Some people say that after a rate cut in September, that will lead to a market drop. Can you explain what you think will happen after the cut? Sure. So you see this a lot. You see a lot of people say, well, once they cut interest rates, the stock market is going to crash, right? Almost like it was one big trap. Like the Fed's going to cut rates, people are going to get all excited, and that's going to be the trap that closes right in that moment and the market crashes. I think that is, you're oversimplifying something that's not simple at all. Because here's the thing. The stock market in 1995, this is what I'm hopeful for, okay? In 1995, we had, I'm going to go to QQQ. No, we can't get it on there. Let's go SPY. There we go. All right, check this out. In 1995, the Fed was able to pull off what is called a soft landing. The idea of a soft landing is where inflation comes down to a sustainable level, like gets between like the 2 to 3% level, and growth remains strong. Soft landing is ideal, but very hard to pull off because getting inflation down usually means you have to hurt growth. So when you can keep growth alive and inflation cooling, you get what is called a soft landing. And this is the result of a soft landing. An absolute parabolic rise for 5 years in the stock market that did end up turning into a bubble that crashed. But you can see how far this thing ran after rate cuts plus solid growth staying alive happened. So you might also point to, well, what about when they started cutting rates in 2008, where you saw this ginormous crash? But here's the thing. Each scenario in the stock market and the markets in general is somewhat unique because the bigger question is not when they cut rates, does the market go up or down? That's too simple. The bigger question to whether or not the market will go up or down when they cut interest rates is what's happening with inflation and growth. Right now, as we do this every day, as we study this stuff together on stream, to me, it seems like growth is hanging in there. We just beat estimates for GDP growth. I've been walking through this stuff with you guys. Services PMI is came in a little bit light, but we've overall been pretty strong here. You've got the AI trade and all of the big earning companies in the US have been reporting so far decently well, right? So the growth story I don't see being crushed at this time, but I do see inflation cooling. Arguably, that would make a good case for a potential soft landing. Does that make sense? Hopefully it does. I tried to break that down the best I possibly can. That is why I'm positioned the way I am. I'm long indices. I liked the pullback. I bought the NASDAQ. I bought SMH, which is the semiconductors like NVIDIA. And that trade is starting out well. Actually, it started off horribly. My entry was early. Market dropped down. And then AMD reported their earnings, and they were a smash hit for the semiconductor. AMD is another big chip making company, Advanced Micro Devices. And some of you guys might have AMD chips that you're using right now to watch the stream. So the semiconductor world got really volatile and then flipped bullish. And so I'm in that trade. I like tech across the board. If I'm wrong, though, I'm watching these charts pretty close. Like if I'm, take a look at the NASDAQ, and a lot of people already pointed out in my chat room this morning, hey, Nick, we're hitting a resistance. Are you going to sell? And the answer is no, because I still fundamentally like it bullish. But I am recognizing that, okay, we're at resistance. I probably need to, look for an opportunity to either trail stops, reduce my risk. So I'll manage that and update you guys inside of the Discord channel. If you're not already in the Discord or the Telegram, we'll drop both of them. They are available for free to join. If you'd like to keep updated with our analysis, Frank and I post constantly in there, just ideas, charts, and things that we're watching. Guys, we're going to take just a quick break really fast to set up for our next live stream guest joining us. It's Miko, and he's going to be taking on the charts with me for a few minutes. We're going to talk some technical setups. Looking forward to it. So stay tuned. We'll be right back just after this. Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our EdgeFinder summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year. All right, we're back with Miko. What's up, man? How's it going? And welcome back to the show. Oh, I think you might be muted.
Hello, hello.
Oh, I can hear you now.
There we go. Hello. Thank you for having me back. Hope you are well, Nick.
Yeah, doing well. And again, for those of you guys who are just tuning into the show, or this is your first time seeing Miko on the show, Miko comes on regularly. We talk a lot of technical charts together, and we usually do start with the dollar index, which I want to get your thoughts on, Miko. So dollar index has been all over the place. Yesterday with the big Fed meeting, we saw lots of volatility there. But this 104 level just does not seem to want to break. It's been so stubbornly strong. What are your thoughts on the dollar right now?
Yeah, so I'm not a big fan of the DXY and the dollar in general. I'm trying to stay away from the dollar actually and focus on some other markets. But yeah, I'm looking at the yen. I'm looking at the yen, but looking at the dollar. On the higher time frame, I don't really know what's going on, to be honest. I'm kind of just looking at this as just a big range, really. This is the weekly chart. So I'm kind of waiting just for momentum and for price to be either falling or pushing higher. Because again, for me, as a trend trader, I want momentum. So although there's some kind of minor trends within these moves, which is great, but at the end of the day, I want to see price kind of sustain moves in a certain direction, kind of like what we're doing over there and over here as well. Not really seeing that at the moment with the DXY. So I'm a little bit on the fence with things. I think because how prices had so many attempts at this low and still failed to break, I think there's a good chance we do see some upside for dollar because we've had probably like 5 or 6 attempts to try and break through this, consistently failed to do so, minus that fake out over there. It does look good for a move higher. So I would be on the dollar bull side of things, but nothing that is really, really attractive for me to trade. It's just a lot of choppiness. So I'm kind of taking it easy with the dollar. Other markets look a little bit better. But yeah, I don't really like the price action at all.
I don't blame you. Yeah, when I look at the dollar index, well, actually, when it was dropping from like 106 here down to 104, and then it tried to poke through that level, I got really excited. I was like, okay, hey, look, we got something here. We might see
Hmm.
some true dollar follow through to the downside. We didn't get that at all. Price was able to bounce back and now just chopping again right around this 104 level. So for me, I'm in the same boat with the dollar specifically. The price action is just not very clean. We're not getting follow through moves, and that's been the theme for some time now. But you
Hmm.
mentioned the yen. I suspect you might be watching some yen pairs just because there has been a lot of follow through with the yen recently. Just huge volatility after this dollar yen kind of cracked its upward, impossible to defeat uptrend. There's been a big slide to the downside. Are you watching any yen crosses right now?
Yeah, I'm definitely looking at the yen crosses.
Mm.
Particularly euro yen on the downside looks really good for me. But in general, they're kind of all similar setups because they've really had some heavy moves. And the yen pairs have been trending to the upside for so long. And we're potentially at some prices where that trend could be looking at reversing, and we could be seeing a big move lower. But over the past few weeks, I mean, the moves to the downside have been very nice. Haven't found any entries myself, very close to $1 yen, but just missed my level. So yeah, after this move down that we have that's happened this week, it's left behind some really nice areas. Should we come back to retest that, I will be looking at entries. And again, it's pretty straightforward. Nice move down. If we do have a pullback here, I will be looking at shorts. Nothing's guaranteed, of course, but at least I know exactly how I'm looking to trade this with dollar. It's kind of 50-50, at least in my view anyway. So dollar, the trend is clear, momentum is clear. So it makes things a lot easier for me as a trend trader to anticipate. So euro yen looks really good. I like pound yen as well. Again, very similar setup, looking for pullbacks, retest some prior support and see if we can continue to ride that momentum. So I really like euro yen, pound yen as well. And I'm liking what I'm seeing.
Yeah, I like those charts as well, and the yen just really showing some strength. I think they raised their interest rate, which suddenly created some heavy buying for the yen. And the other thing just to think about with these yen pairs is that the rate at which they fall is just impressive compared to how fast they rise. I mean, they do rise very quickly. The uptrend has been
Mhm.
very aggressive, but this is a pattern that you'll notice about the yen and just its characteristic. Like, every chart has its own kind of unique, idiosyncrasies, its way of moving. Well, the yen is very specifically volatile to the downside because when people get scared about the financial markets, when they get scared of or uncertain about what's going to happen, the yen is like the stable. It's like the stable coin of fiat currencies. It's like where everybody rushes to go to when they're uncertain about what's going to happen next. So you'll see that these sudden drops in the yen, like here was 2020, or the yen crosses where people are buying the yen aggressively and selling like the pound or selling the euro. That is a theme. So if you can catch these moves to the downside, they can be very lucrative. The tricky part that I find with these pairs is that trend is very steep to the downside, but usually doesn't last very long. But maybe this time is different. Maybe this time we're seeing serious global concerns, and maybe there will be a lot of follow through. So right now, I don't see where the bottom is on these pairs. There does seem to be a lot of downside momentum, but we'll have to keep an eye. So you mentioned pound yen, euro yen. Are you looking at dollar yen at all, or not really?
Dollar yen, not really to the downside. Reason being, we've come into some interesting levels on the weekly chart,
Hmm.
um, which is over here. So I do keep an eye on the higher time frame to see what price is doing and where we're
Yep.
coming into. And dollar yen has come into this level here. So it actually makes sense for dollar yen to see some upside. Now, potentially all the yen pairs can do that because they're kind of all moving the same way. So it's either they all move up or they all move down. But from a technical standpoint, and again, being a very technical trader, I don't really feel comfortable selling into this. Whereas if I'm looking at euro yen, we've kind of cracked through support over there as well. And pound yen, we haven't really come into any area, any meaningful level in higher time frames. So I don't mind continuing to look to sell that, whereas dollar yen has. So it's being picky because they probably will make the same move together.
Sure.
but I would be happy to trade euro yen because I know the path is a little bit clearer. Same with pound yen as well.
That's actually a kind of an interesting concept there too, Miko, about like you may choose, even though you just acknowledge like they're going to probably move in the general same direction, picking
Hmm.
your specifics is huge. And for me, as primarily an index trader, picking specifics is like everything, because I'm generally bullish on the stock market, but there are so many different ways you can be bullish. You could be bullish on stable, conservative stocks, or you could be more bullish on high growth, high risk, high reward stocks, or you could be somewhere in the middle. You could be on the small company side, the big company side. And to your point about the yen, if you're trading currencies, you have all different options there as well. Are you going to be, more going with the US dollar? You like the US situation, or, as you're pointing out with price action, maybe you just very specifically think that a chart will move a lot better. One thing I've noticed about currencies is that if I'm looking at, if I'm looking at a momentum trade, and I'm looking at, let's say I'm looking at AU, GU, and that's E, and EU, right? So if I'm looking at the euro, I'm looking at the Aussie and the pound. If I'm looking at these three and I see like this one is just rocket shipping the best to the upside, this one is going up, and this one is kind of going sideways, a lot of times people would say they would maybe pick, like, if you're bullish on all three, a lot of people, what I've noticed, will try and go for this one because they say, well, this one hasn't run yet. But what I've noticed a lot of times is the best pick is actually this one, the one that's already trending very well, the one that's making the move. Even though you might say, well, it's already made the move, a lot of times it's going to make a lot more move even than this one, which might do a little bit. I don't know. Have you noticed anything like that? Like sometimes just buying the winner or selling the winner, selling the biggest loser is an interesting strategy by itself.
Yeah, I fully agree. I mean, because with me being following the overall direction of the market, trend and momentum is really important. So if Aussie dollar was the one that's really pushing up and there's a lot of momentum there already, I know as a buyer, I'm going to have, it's going to be a lot easier for me to ride that higher. Whereas with the pound USD that's moving sideways, it's kind of like I'm trying to kickstart the market, which is not actually moving anywhere. So it might, like you said, it might progress and be a big move because it hasn't moved yet. But at the same time, as a retail trade, it's just so much easier to trade when there is momentum in the market and not trying to force anything because it's not there yet.
Yeah, exactly. Well, I want to go to our next chart here. A lot of people have been asking about gold, which is getting closer again to its all-time high. I've been kind of on the sidelines with this one. I mentioned I've been trading a lot of indices in the last few weeks. We've also been a bit choppy for me, but we're starting to see what looks like a higher low, some momentum picking back up in this market. We also had some geopolitics that kind of escalated things again in the Middle East and seem to be pushing gold higher. Do you have any thoughts on gold or silver, either one, metals?
So yeah, generally speaking, still very bullish on them. On the higher time frames, we're still pushing up pretty well. As you said, we are becoming a little bit more corrective, so it's difficult to find trades. I did take a position last week on gold, and I just got stopped out annoyingly. But yeah, that's going to happen sometimes. It was roughly around there. Just took me out before it decided to fly to the moon there. So I've been looking for pullbacks for it, but now it's a little bit too high. So I do need to come back down. I wouldn't be looking to take any buys in this area, so close to the high and generally resistance. So I do need price to come back down. But yeah, it does look pretty bullish. We just had the monthly candle closure as well, and that closed pretty bullish too. So, who knows, potentially you could see August push on from that as well. And generally speaking, it is just a very bullish environment for gold and for silver as well. Although gold looks a bit more attractive, silver looks a little bit more chaotic. So I'd rather look for pullbacks on gold at the moment. But yeah, I wouldn't be surprised if you were to go and hit that high pretty soon and maybe see some new highs at 2,500.
Yeah, I like the gold chart better than silver too, which is interesting because we both flipped on that. We both at one point were like, "Oh, the silver chart looks way better," and I did take this trade, and I made some money on it, but I ended up trailing stop right there, and the entry was like right there. So I made some money, But I was thinking, oh, this is going right through the highs. And we did not get that at all. We kind of fizzled out, put in 1 grand lower high, and then the market broke underneath this. So to me, price action's tricky on silver. And in fact, we're at a level of what was support could turn resistance here. But if it is able to break above that, then that would perhaps bring some confidence back in. But even still, even if we break out here, if that's what happens in the next, few days, I'm still like, okay, well, now we're just in a choppy spot. Whereas with gold, to your point, chart looking a little bit better on the daily here, because this actually, I also had some not so fun experiences with gold. So I went long here. This was great. I made money on that one. And then when we broke back underneath here, I trailed out. So I gave back some gains. Then I went long again right around here, thinking that this level could offer some support. It did, but then my stop loss, it failed out right here. I never trailed a stop, and then I took a loss there. So I gave back some profits, then I took a loss, and now it's moved on without me. So where I'm at to now is okay, this has been a nice push. We've broken through where we last, failed out. We even retested, and I didn't get that entry, but if we get something like this, I may actually be looking at, trying to take this back to the highs, because I think that to your point, the higher time frames still look generally bullish for metals. And this is a good, as you mentioned, a good environment without even getting far into the fundamentals. We're seeing expectations for rate cuts, and geopolitical tensions are still high in the global stage. So I generally like it. So we'll see where that goes. But just wanted to get your thoughts on that. So I guess next one to go over is the indices. So, my favorite spot, but the recent pullback looked pretty daunting. Then it seems like we found a little bit of a bottom. What are your thoughts on any of the indices?
So yeah, indices are looking pretty good, I must admit. Particularly NAS and S&P, especially in the higher time frames. I've been eyeing them up on the daily, and I think we've had a really nice pullback now. It seems the pullback has pulled back enough, if that makes sense.
Yeah.
To a point where we could look to continue. I mean, in terms of how the market's moving, it's pretty proportional as well. And I like the fact that we've got this trend line confidence coming in, a really nice rejection yesterday, strong bullish engulfing candle. So it does look like momentum is shifting from the bears and back to the bulls now after this move. So as long as we can kind of hold this general region here around 18,800, I would say on NAS, I would expect us to slowly make our way back to the high. Sure, there might be a bit downside in the meantime. This is the daily chart, so there will be bearish candles there. There will probably be shorter term sell opportunities. In fact, we're kind of trading at some areas right now where price might take a dive. But generally speaking, I would expect NAS to make a move higher. Same thing with S&P as well. I believe this one had a similar trend line connecting the low here to the high as well. And again, another reaction there on the daily chart. Strong candle engulfing all this previous price action. So momentum is shifting there. So I think there's a pretty good chance we'll probably make our way back to the high there as well. So, and US 30s almost at the high as well. So generally speaking, it does look pretty bullish for the indices, and we could probably see higher prices.
So I love your breakdowns there. I do see mostly the same. I mean, I wanted to talk about this Dow because I'll brag first, and then I'll tell you about my not so fun parts about the indices. I caught this entry like I've not had a trade that had less drawdown in a long time. It felt really good. I got this entry, and it was like immediately. So, even though this was for me a fundamentals plus technical trade, as it always is, you got to give it to the technicals here on the timing. I mean, the perfect, it was so obvious. But here's the thing, Miko. I mean, a lot of times people will say when it's so obvious like that, it's going to like fake out and then do this. But this is why I'm an advocate for technicals, keeping it simple. I know you are as well. This was a key level of support. It was a round number. I mean, 40,000. In hindsight, it's very obvious that was going to hold. But in the moment, it's like, man, this thing is selling off a cliff. I don't know. This may hold. This may not. I liked the risk reward, and the market immediately moved in the right direction for me. So just wanted to brag for a second. And then on the NASDAQ, I am in a good trade now, but I took multiple stabs before getting it right. So I took a big loss here, tried to go long on this pullback, thinking, kind of this trend line would hold. Did not. Came down to this support level, looked good for a second there, then fell through the floor, stopped me out. I lost more money there. Then this entry went very close to hitting my stop loss and has now bounced back into profit. But just, even in a bull market, it's easy to mess up the entries. So may have been a bit aggressive in my first attempt and second attempt, but the third one was good. And the Dow Jones entry looks like it might hold for here. I'm curious to see if we can break through the highs, but we'll see. But thanks for breaking those down. I know indices are very hot this year. They've been just in a perpetual uptrend. And so I've been trying to kind of pull back entries, stay calculated with it, but nice to hear your thoughts on that. Last one, as always, is Bitcoin. What are your thoughts on Bitcoin right now? Too choppy, or is there something here?
Bitcoin is in an awkward position, at least according to my analysis, because I've been talking about this descending channel for a while. And basically my thought process is with Bitcoin, we had a lovely move up. Market is potentially in a correction of that move. So, if it's in a correction, we should see price, start to spew out on the other end and see that momentum continue. However, we're not quite seeing that, and we're failing at the high there again, which is not really a good sign. And typically when price tries to make the move to continue that trend and it fails, normally we do get a big sell-off at the end. So I'm actually favoring Bitcoin to probably come back down one more time. Unless if something changes. I know we got big news this week still, NFP on Friday. And of course, things can just change in the blink of an eye of Bitcoin. So unless we see a strong break of the high, something like this, then okay, yeah, I would favor that next kind of push to the upside. Because I think if we do break through the high, I think we're going to get a really big move for Bitcoin if that's the case. But if we don't, which at the moment is not looking like we will, I think Bitcoin can just roll back over, and that could even mean more downside as well. So this area 70K is kind of make or break for me. And at the moment, it's not breaking.
Well, the thing is with Bitcoin, it's been, and we've talked about this before, but it's been notorious for getting everybody kind of excited, and then it goes into a very prolonged period of doing absolutely nothing. So it is, it's an interesting asset class, because when it makes its moves, it is just continuous in one direction, whether up or down. It was like back in 2021 when the market kind of fell apart. The Bitcoin world just went down, 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 and then it just stayed sideways and lower for a long, long time. So it definitely has a personality trait of kind of disappointing the crowd. So, but to your point, I mean, if we see the breakout of this kind of upper downward trend here, if we can finally break that lower high gradual downtrend we've been seeing the last few months, that could be huge for Bitcoin and perhaps could be that next leg higher. But I think patience is really key when you're trying to trade something like this, even if whether it's investment or whether it's, an active trade. I think especially if you're actively trading, you got to wait for the thing to make the break, at least in the way I know you and I trade. We're looking for that momentum. We're looking for something to, we're looking for cut it smooth as butter, not try and sit here and wait for it to make a move,
Exactly.
Yep. Well, Miko, thank you very much for coming on the show. As always, I just wanted to make sure everyone who is listening know that they can find you on your YouTube channel. Miko's got his own channel, as I just mentioned. He's got it linked here in the chat. So if you guys are not already following Miko on his channel, do me a big favor and do us at the A1 Trading Show a big favor. Miko's a regular contributor to what we're trying to do here, which is create a community-based kind of live stream for traders with different takes and different opinions on the markets, collaborating each day. If you're in support of that mission, do us a big favor and subscribe to Miko. Support him for coming on the show. Miko, thank you very much, man, and we'll see you back next time.
Thank you. Take care. Bye.
All right, man. See ya. All right, good stuff. And always good to have Miko on. Again, anybody who is a regular contributor to the A1 Trading Show, we want to make sure that we're always supporting them and helping them grow on social media. This is a lot of work to come on to shows and present and prepare. So a great way you can support us for free is by hitting the thumbs up button on the live stream, but also supporting our guests. So yeah. We got PMI numbers coming out in 50 minutes, which should be definitely an interesting time. Did I get stopped at it? No, I did not. Look at this, guys. Dollar Swiss did not quit. We are still in the dollar Swiss short. This year has felt really, really quite good for my trading. I've got to say, there's been years that are not so fun, but this year has been, we've been really, really on the spot with the idea that rate cuts are coming, that growth is hanging in there. And that theme, that one big theme on the fundamental front, has led to a lot of overall very good setups and decent trades. Yeah, look at this. So if we do an analysis of USD CHF, the thing here about it is, I'm going to pull up the trade alert. Hold on. So USD CHF, when we first took the trade, it's been a minute since I even shorted this thing. Yeah, here it is. Gosh, I've been in this trade for a month. This has not felt like a month since I entered the trade. Here was the initial entry. It was a very simple technical setup, 61.8% retracement, big push lower, came back up to resistance, and I sold with the stop loss above. That was the initial entry. But then if we take a look at the analysis, dollar continues to look bearish, slowing inflation numbers, jobs showing signs of cooling. So I took that trade about a month ago. And the thing is, I think that especially me, when I first got into trading, I glorified the idea that, you know, trading was about taking a lot of trades and you're like in and out of the market. Oh my gosh, I was so obsessed when I first got into this stuff with the idea of just getting in, getting out, taking my profits and walking for the day. I know that that is so fun to think about, but what really changed everything for me was when and I'm not saying that this is like the holy grail for other people. This is just what really changed things for me. Swing trading plus fundamentals really changed a lot for me. But not just that, also managing risk appropriately, keeping my size on each trade appropriate really made a big difference because it made surviving drawdowns much easier, etc. Anyways, dollar Swiss, we're still in this trade. Lower highs, lower lows, so I'm still going to stay in it. Right here was the initial stop loss point. Market has come down and down and down, and we've just been able to trail a stop on this one. It's actually surprised me how far it's gone. I didn't think it was going to, I thought we would have downside. But this is just the power of trend following. Sometimes the trend goes way further than I even think it will. That's why personally I don't use take profit orders. So even though you see this, I'm marking this up with the take profit, I don't have a take profit on the trade. I'm just trailing stops. NASDAQ is flat on the day. S&P slightly green. Dow slightly green. Gold also green. Oil had a big move up yesterday. Curious to see where that goes today. How do you deal/predict false breakouts? There's no predicting it with certainty. Like if you take a look at the dollar index, I thought this was a real breakout and it was a fake out. So you kind of just have to accept there's going to be a level or a margin of trades, a number of trades that are just false breakouts. The biggest thing, one of the big things that I can also say that really helped me in my trading was stop obsessing with entry points so much. Everybody does it. Everybody is so obsessed with entry points. Entry points are, so here's the thing. Crash cheat diets to the fitness industry are what entries are to the trading industry. So you know how like with proper like fitness and health, the true fitness working out community, they make fun of the idea of like crash diets, like abs in 30 days. That is so nonsense, right? Because that's not a consistent, predictable way to actually get fit and healthy. And usually doesn't even involve any sort of diet. It just involves like do sit-ups every single day, right? That's not a sustainable way to predictably get healthy and fit. I'm not a fitness expert, so ignore me. But my point is, in the trading world, people obsessing over entries like it's candy at a candy shop gives the same vibe to people who really trade and really know what they're doing. Entries are so overhyped, it's not even funny. Why don't I yap about UK data? It's because I don't really trade currency pairs that much compared to other things. And if I do trade currency pairs, it's usually a dollar cross. And most of my analysis is on US data just because that's what I really specialize in. But in terms of pound data, they cut interest rates, which was a big deal, right? 5.25 to 5%. This was slightly expected. Let's take a look at the pound reaction. Pound lower today, breaking that support level. I'm glad I didn't buy that, but I didn't have a reason to. I wasn't getting any signal from the EdgeFinder, so I didn't take any trades on the pound. But today, breaking that support level, it's a big deal. And it does make sense too, because they cut rates, right? And let's see what the bank rate votes told us as well. Let's read this really quick. Increase, decrease, hold. They did have expectations for 6 members to cut rates. I'm sorry. First number is how many voted to increase interest rates. Second is decrease rates. And third, yeah. So they were expecting 6 people to say that they expect to cut interest rates. They only got 5. 4 people said hold compared to a 3 hold expected. So they did cut rates, but it was almost like just a tad bit hawkish cut. Is that right? Seems to be kind of the theme, because if it was a very dovish cut, you would have expected, even more downside for the pound today. Can you take a look at the Nikkei? Sure. JP225. The Nikkei seems to be sitting right around a level of support. And I think this one actually has a bullish reading. No, it doesn't. I thought it did. The Nikkei sitting at support, it seems like. Personally, I don't love the growth story in Japan as much. So I'm going to probably prefer other indices over the Nikkei. But we are pretty close to a big level of support. So we'll see. Bitcoin, possible bullish setup. The FTSE, bonds, USD CAD, Dow, Russell, dollar yen, still looking kind of bearish. Possible break and retest here. If this downtrend is going to continue, you'd probably expect that to hold. We'll see. We will see. Real quick, guys, I think we've got Nick Phillips coming up on the show next. I just want to check the schedule really quick just to see. You guys can always check the schedule, remember, on our website, a1trading.com. Just hit the live stream schedule. The team behind the scenes is always putting together our schedule here. So we got Nick Phillips coming on. Oh, he's coming on now. So what we'll do is we'll just take a quick break, get him set up to take over the show for a little bit, and then we'll be joined back at 10 with Chris. We'll do PMI numbers. So stay tuned. We're going to set up Nick to take over the show for a little bit here, and we'll be right back just after this quick break. Check it out. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. Welcome to the segment of the A1 Trading Show. Real quick, we've got some PMI numbers coming up here in the next about 40 minutes that I'm going to be trading with my private group. So I'm going to just touch on a couple things. Some of the most major things that have happened over the last 2 days. Obviously, the Bank of England just met this morning. The Feds met yesterday. Let's tap in here just on a couple things from my recap post. The Fed stated that inflation is under control, but they are remaining vigilant. They want to get it down to 2%. It's eased to 2.5% so far. They are still strongly committed, is their verbiage, to returning inflation to their goal. On the current monetary policy stance, the direct quote from Jerome Powell is, "The FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures." As far as future outlook is concerned, economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. They are pretty data dependent when it comes to all of their decisions moving forward. And while this quote doesn't tell the whole picture, I'll explain in a second. We do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably towards 2%. That was the overall current of the FOMC meeting. However, Jerome Powell did say, there was one quote from him where he said the most likely next scenario is a cut. And the markets took that in stride yesterday. Let's see. So his comments on those things were happening around the 250-ish mark. So right in here, he started making comments about the next move is most likely a cut. And then he made a comment about it possibly being in September. I can't remember the exact verbiage, but it happened right in here around 250. And then we saw the dollar just drop off for the rest of the day. But I think the markets had some time to digest the information and really listen to what Jerome Powell was saying, because they've already discounted or faded the entire dollar weakness move from the FOMC meeting. So the underlying current here, that's why my underlying what I left here was not what he said specifically about September, but their overall approach to the market is they want to gain greater confidence that inflation is moving sustainably towards 2%. There was a quantification question that was asked yesterday, asked and non-answered. Quantification in this situation, meaning, what is it that you guys are looking for when it comes to greater confidence that inflation is moving sustainably down? We've had a fair amount of consistently lower readings on inflation. So what's it going to take? That's kind of the quantitative question. Let's see. This is sort of my Fed outlook in one sentence. The Fed is focused on maintaining the current policy until there's more confidence in the data, indicating a dovish tilt with a cautious outlook. So they're looking they're leaning dovish. They're looking to cut rates, but they're gonna be cautiously approaching that decision based on economic data. The biggest concern with cutting too early being the risk of a resurgence of inflation. So it's understandable why they want to keep rates where they're at, but it is also like how long is too long? Because there are risks involved with keeping the policy too restrictive for too long. So whether or not we are there, whether or not we have a policy that is too restrictive, I think it is yet to be seen. We don't, and it's also kind of one of those next level questions. The meta question, I guess you would say, to that is, well, how do you know if policy has been too restrictive unless you go to a place where the economy is in such uh, disarray that it's like it's a hindsight question. Is it a high? It's the Feds do not have an easy job. I do not envy them their position. They're in charge of keeping a lid on an overexpanding economy and then bolstering a lackluster economy. And that's a tough job. So overall, data dependent, leaning dovish, but it's not necessarily a case for dollar sells yet. So again, still pretty neutralized on the doxy as far as my outlook. I'm again, there's competing ideas within the marketplace right now. So we do have some weakening economic data, but we have a Trump trade situation that's potentially looming, and then we have the data dependency sort of non-committal. We're directionally poised to start easing policy, but the Fed themselves are kind of non-committal about when we're actually going to get to that place. So, um, yeah, that's my FOMC summary and a wrap. I have not got a chance to write up the Bank of England summary, so we're just going to step over here to Forex Live and take a look at what Justin Lowe has said. Let's see, it's 9:30 now. Okay, so. The bank rate vote was 4 to 5, which it was expected. We got a cut, and I think a lot of people, myself included, with the cut, would have liked to have seen more downside move out of the pound, but we didn't end up getting that. We got this massive rally to the upside. And as far as why it moves so far to the upside from the rate cut, which obviously, we're looking at the 1 minute chart. So depending on how often you look at these lower time frames, this isn't necessarily a massive move. If you scale out, it's really not much of a move at all. But comparatively to this initial downward spike, we moved pretty far away in a bullish direction from where price was trading at the release of the rate decision. So when you get a cut like this and then you see a bullish uh, bit of price action follow it, makes you scratch your head a little bit. But the general idea here, I'll say this: the decision was finely balanced. The bank rate decision, like it was basically even. It got cut based on a hairline vote, essentially. Like for the 4 to 5 is a pretty flat line split. So you have almost just as many people voting for a hold as you do for a cut. So pretty pretty close call there. Um, I think that's part of the reason why the pound did not continue in a dovish direction or a bearish direction this morning. Um, they're data dependent. They're going to decide on a degree of policy restrictiveness at each meeting. Uh, da- 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 da. I, based on a cut, when I was trading this, based on the fact that the Bank of England cut, I was looking for reasons to sell the pound during that whole conference. Sat and watched the entire conference. Governor Bailey, none of the board there that was sitting there on the panel, none of them said anything that gave any reason to cut or to sell the pound. But they also didn't give me any reason to buy the pound. I'm not gonna buy the pound on a cut unless we have very like hard, decisive language that tells the market this was a one and done cut. We cut now. We're not considering cutting again in like any time in the future. For whatever reason, I can maybe see that giving a hawkish reaction, a bullish reaction out of the pound. But I had no reason to get in on buys, and I had a reason to get in on sells if we had gotten the right language in the press conference. Now, I took a sell at the initial rate drop and ended up taking a small L over here. Decided to get out. I didn't like all this price action, this pullback here on the pound. I wasn't a big fan of the way that this was playing out. So, took a small loss here and was looking to get back in somewhere, but just never really got any solid indications out of the press conference that I should take a sell. So, yeah, bit of a mixed bag out of both. Not mixed bag, but data dependent can kicking fiesta out of both the Bank of England and the FOMC. Could be argued that it wasn't a can kicking fiesta because the Bank of England actually cut rates, but their projections and their forward, all of their projections that came out today were actually mixed. If I can, it's monetary policy. That's actually gonna be pretty in depth to try to go back and forth between these projections and the most recent projections. I had the data in front of me earlier. Their economic projections. Let's see if we can pull it up on Financial Juice. All right, so they gave us CPI and GDP and unemployment. Okay, so CPI in 1 year's time, 2.4%. The May forecast was 2.6%, so that's down. CPI is down a little bit from their previous projection. GDP growth in 2024 up to 1.25%, as opposed to a 0.5% as they forecasted in May. So that's up. GDP is up. CPI is down. Unemployment rate 4.4% is the exact same. So pretty mixed bag. Just looking at these data points, they're expecting CPI to be lower than they previously forecasted. They're expecting GDP to be higher than they previously forecasted. Pretty mixed bag as far as what that could mean for their economy. So yeah, that's, I don't want to say dud meeting on both sides, but to some degree, dud meeting on both sides, even though we got the cut from the Bank of England. What do I think lower PMI numbers would mean for the inflationary story? I mean, it's the way I look at PMI is it's a, if I can remember correctly, I believe PMI is a leading indicator. Maybe wrong. Leading indicator of inflation. I tend to look at it. I guess I mentally always perceive it as sort of directly inflationary. If that makes sense. Like I trade it the same way I would trade inflationary news. So if we get higher than expected PMIs, you asked me, what do I think lower PMIs? If we get lower than expected PMIs, I'm going to see that as a dovish signal towards monetary policy, which would make me inclined to jump in on a sell on the US dollar, like any US dollar pairs. I guess I shouldn't say sell, but I want to get positioned to take advantage of dollar weakness, even if it may just be a momentary blip for 30 to 40 minutes. So yeah, lower PMIs. I'll be looking to get in on sells. Now, granted, we're forecasted to get 48.8 on the PMIs, which will be up from 48.5, but it's still not above 50. Let me see what the range is here. Menu PMI. Okay, so anything above 50.5 for me is going to be, I'll be looking to buy the dollar. Anything below 48, I'll be looking to sell the dollar. And I would prefer manufacturing prices paid. Like, let's say I'm looking for dollar sales. I want PMI to come out below 48. You guys should write this down. This is basically my trading plan for ISM PMIs today. Prices paid, I want it to be below this low of 42.5. And then employment index, I want it to be below the low of 49. And then for if I'm going to be looking for the opposite scenario, if we get these numbers, I'll be looking at dollar buys. Manufacturing needs to come out above 50.5. Prices paid needs to come out above 53, and employment index needs to come out above 50. Now, this is the thing. The reason why, you might be like, why did it take him so long to reach those conclusions when the numbers are right here? Sometimes like if the previous is higher than the uh, highest number, what is the word? I'm losing the word right now. The highest projection, sorry, this is a range of projections from major financial institutions. So if the previous was higher than the highest projection, I may go with the previous as my trigger for a buy situation. Vice versa, on the low side, I want to make sure that the lowest projection is lower than the previous. If the previous is lower than the lowest projection, I may use the previous number as my trade trigger, as opposed to the low of the bank range. So this is just a little nugget for you. Whenever I'm trading uh, economic data, which is the main way I trade, I don't just use this forecast. So you see this forecast number: 48.8, 51.8, 49.0. ISM manufacturing PMI, we'll just pull this one up. 48.8, that's the forecast. 48.8. That doesn't tell the whole story. The whole story is that there's a range of projections submitted by big financial institutions, the lowest projection being 48.0 and the highest projection being 50.5. We're getting that 48.8 as sort of like a middle ground between the two. So when you're looking at something like a Forex factory, when you're looking at Forex factoring, you're seeing the ISM PMI number being 48.8. There's a little bit of room for error there. If let's say it comes out at 49, it's going to come out above the forecasted, but it's inside this bank range. So it's not necessarily a surprise to the markets, even though it came out higher. This is where a lot of people that are trading fundamentals will think that like it's manipulated, because they'll see 49, this will drop as 49, and they'll see that it was higher than the forecasted, but then maybe instead of the dollar actually going north off of that information like you would think it should, right? Because you open this up, it'll say actual greater than forecasted is good for the currency. So instead of the doxy going up off of a 49 print, it either like maybe spikes up a little bit and then consolidates and then falls, and everybody's like, oh, manipulation. It's like, well, no, it didn't come out exactly as forecasted, but it came out within the range of forecast that most people just don't know exists. You can get this information on Financial Juice. If you go I'll pull up a different, go here to daily prep articles on Financial Juice. I think this is included for free. There's a paid subscription and a free subscription, and you can get these numbers here. This is one good resource. They have the range of being 55.5 and 47.8. So they have an even lower number from some projection as opposed to this terminal right here. So that's an even better trigger point, anything below 47.7 for dollar weakness. But regardless, yeah, you can find them there. You can find them on Reuters terminals. Those are the only two places I know of. I know Forex Live, I think I've seen recently, Forex Live has started to include range numbers in some of their outlooks. Yeah, I don't see anything from them on the ISM stuff. Kickstart, maybe it's Kickstart. It says technical look. Okay, yeah, so nothing from them on the range. Sometimes they post range figures, but Financial Juice is a good resource. What do I think will happen to NAS on the news? This is the I have like a standard approach to some of these things. It's 9:42. Okay, I gotta get off of here in just a few minutes. But my standardized approach to most of this stuff. We'll take. I'll just answer this in terms of PMI to equities. If we get for PMI specifically, let me be clear. For PMI specifically, if we get lower than expected figures, lower than these ranges, I would expect equities to go up. I would expect equity upside. This is not don't just jump into equity buys because the data drops the way I'm saying it's going to drop. You want to make sure price action is agreeing with you, with the price action is agreeing with the bias. So lower than expected figures, equity upside, higher than expected figures, equity downside. Little caveat, a little bit of nuance for you. During earnings season, equities have a lower probability to react the way that theoretically the markets would expect them to based on certain bits of news dropping. Like if lower than expected figures across PMI board would normally produce a bullish move out of equities, earnings season could affect that. Earnings season could have it has a historical track record of affecting the way that equities are performing. Economic data be damned, if that makes any sense. Excuse me, I just said be danged on YouTube live stream. I hope I don't get dinged for that. Not really sure what the rules are in terms of that. But yeah, so it's I tend to avoid equities with the way that I trade during earnings season. I don't even bother because I've seen it happen so many times where equities should theoretically behave a certain way with certain data getting dropped, and they just don't. So I don't really bother with it. And then as far as oil, I really I don't even, not that I don't pay attention to oil, but I would put it in the same bucket as like gold and equities. But again, don't take that verbatim because oil is not something I actively watch, actively have a mind for, if that makes sense. I have a mind for currencies. Like currencies make all the sense in the world to me. Gold makes a lot of sense to me a lot of times, but there are times where it plays in ways that don't make sense to me. But currencies is kind of where I have like a real good mind. You'll find in your trading journey at some point you develop a an ease of understanding for certain assets. At least in my experience, I have an ease of understanding for certain assets. Yeah, so that first PMI, the S&P manufacturing PMI, that's cool. I'm not really paying attention to that as much as I am looking forward to the ISM manufacturing PMIs.
Hey Nick, what's going on, man?
What's up?
Loved your points right there, just about finding your kind of your niche, like what you like the most, and probably a good message for a lot of people in the audience, because if you're someone in the audience, you got to think, Nick, like they have watched so many different people come on to our rotation here. We're all kind of pitching in on our specialties. You know, you're focused more on the currencies. We have other guests that focus on gold, on indices. Everybody kind of has their sweet spot. And maybe the message to the audience, as you've just pointed out, was it's not about which market is the best or which strategy is the best. It's all about finding the one that makes the most sense and you have the most clarity on. So really good stuff there.
Absolutely.
Yeah, absolutely. Well, Nick, thank you for coming on again, as always, and helping out with the show here. For those of you guys who enjoyed that commentary from Nick, do us a big favor. We always want to thank our guests for taking time out of their day to contribute to the A1 Trading Show. And we want to try and kind of reward them with new people who can come find their content. So Nick has his own Instagram and his own YouTube channel. We've dropped the link here in the chat for you guys to go check out. So please do that. Take 2 seconds, go show him some support, send him a DM, that sort of thing. And Nick, thank you very much for coming on the show today, man.
All right, no problem. You guys have a great day.
Thanks. All right, guys. Yeah, I just wanted to kind of follow up in terms of the data that we are getting here pretty soon. We have the ISM manufacturing PMIs, which many of you guys will recognize that is also something that we watch on the EdgeFinder's scoring system. ISM manufacturing PMI will impact some charts here. I was just looking at some stuff. I did take a trade here just off camera. So some stuff is setting up for sure, but I wanted to just point out that, again, we have not services today, but manufacturing PMI. I imagine services will be tomorrow or maybe Monday. Usually they're like right back to back. So not Friday. Services. Yeah, services is Monday. So we have ISM services Monday. Today we have manufacturing. So should be a big deal. This is one that I'm really interested in. Now, I know that oftentimes when new traders get into this stuff, they hear these phrases like ISM manufacturing PMI and CPI and all these kind of like acronyms that sound so fancy and scary. But trust me, if you stick around on these shows, we cover a lot of this stuff, and I hope that we're doing a good job at breaking it down to keep it as simple as possible. Think of this really simply. What is ISM manufacturing PMI? A simple way to think about PMI, which stands for Purchasing Managers Index. I always like to think of a factory, and at this factory, there's some purchasing managers, right? There's people who are in charge of, say you're in charge of the loading bay, or you're in charge of ordering, parts for the factory, right? These decision makers are in the weeds. They're in the thick of it, right? They know exactly, they have a good finger on the pulse to what the factory, let's say in this case, what it's reporting, right? Or what it's likely to do in the coming months. If you're sitting there and you work at the airport every single day and you see volume is going crazy, you see people are, really booking a lot more flights than they used to be, you have insights. And so purchasing managers have powerful insights going forward rather than looking backward. It's why I personally love PMI data and consumer sentiment surveys. I love these things because they give us a forward-looking view of the economy. So PMIs are huge on the EdgeFinder scoring because they give us a look at what manufacturing decision-making people in the economy are seeing coming down the pipeline. Like if you ask me about my own company, I could tell you a lot about like what's coming down the pipeline, because obviously I'm doing it every day. We're doing a lot of stuff. I could tell you about our show plans. I could show you about the statistics of the YouTube channel. I could show you, I have all that information. And so does my team. Like we could tell you with pretty good, we can't see the future, but we can see a lot of stuff. So these purchasing managers in their respective jobs, in factories, in manufacturing, the manufacturing industries, they can see a lot. And so their forecasted view of the economy is very insightful. Okay? So we've got that coming in 10 minutes, which will likely be very important. Now, how will it be important? Well, if it comes out lower than expected, the expected number is 48.8. If it comes out lower than expected, that would be considered bearish for the dollar. It would be considered bullish for gold. It'd be considered, I'm going to say mixed for stocks, because I actually want this number to come out strong for stocks. I'd like to see that rate cuts are expected, but at the same time, we see growth really stay strong. I would actually like to see, for my personal positioning, PMIs come out strong today. But I don't make what I want doesn't matter. It's what the market does. I'm just saying that in terms of stocks, I would lean towards a more bullish print for stocks would actually be a higher PMI number. Not by a huge margin, because we still want to see the economy normalizing in order for inflation to keep coming down. But I don't want to see this. What would be not fun for me in the stock side of things, it would be more bearish, would be if you got like a low, 47, 46 reading. That would be not good, right? Hopefully that makes sense. Remember that above 50 is considered growth, below 50 is considered contraction. We have a chart that helps with this. So if you are somebody who has the EdgeFinder, head over to economic growth and go to manufacturing PMIs. And here you go. You can see this is the historical PMIs plotted on our chart. Remember that above 50 is considered growth, below 50 considered decline. So you can see we've consistently stayed more in the decline range for manufacturing. Manufacturing is a smaller component of the US economy. In other places, it's a larger component. Like if you're thinking China, right? They make everything. Manufacturing is key for the Chinese economy. In the US, it still is important, but it's not as important as like services PMI. Services, we're a very, the US is like the tech hub of the world. We build technology, software. That's why it's such a big component of the S&P 500. Software and technology is the US bread and butter. Manufacturing, however, which we get today, is still important, but I would say it's second to services. I hope that makes sense. I hope that's helpful. In the US, we're lazy. Man, I don't think we're lazy. I think the US is, let's just say this. I'm proud to be an American. I think we're awesome. Some people might disagree. That's okay. Everybody should, I think, love their country. Anyways, as long as there's always something to love. I love the American people. Thoughts on tipping culture recently? I will say, sometimes when they give you one that doesn't have the no tip option, I find that just comedic relief. You're Canadian. No, I'm not. I'm American. US. So let's see what we get. Again, coming in about 5 minutes to go, we've got the manufacturing PMI. We'll see what that brings to us. NASDAQ actually kind of reversed into the green territory. The Dow Jones is flat. Dang, what happened? I was just looking at the Dow looking great. How does this manufacturing impact the indices? Again, my thought process on this is that I actually want to see services and manufacturing come in higher than anticipated. That would be, in my opinion, actually good. And it is kind of an opinion, because some people would say you want it to keep cracking lower so that the Fed really cuts rates. But I would kind of lean more towards, I want to see growth stay pretty good and inflation to cool off. That obviously is the ideal. Walk into a Froyo store and do all the work and they want tips. That is kind of crazy. There are times, tipping culture, I think I have nothing against tipping if someone, does a good job, and I feel like there was value added because of their work. But I agree that, yeah, tipping when someone hasn't really contributed anything to the experience is a little bit wild. Dow's flat. Look at the divergence here. I'd like to see what the heat map looks like today. Look at Meta's up 9%. Whew. Meta's up 9%. Nvidia's up 1%. Eli Lilly up 3% today. You've got some areas that are not as green, but you've got some areas that are very green. Interestingly, I noticed this. Check this out. Nvidia is very green, but these semiconductors other than Nvidia are actually red. My SMH trade is actually slightly down on the day. Even though Nvidia makes up I think it's like 20% of SMH, which is the ETF that I'm long for semis. You can see it's actually down 0.37%, even though Nvidia, the flagship of the semiconductor squad, is actually up on the day. An interesting heat map, to say the least. I mean, you got, I would say it's broadly pretty green. I mean, this is a pretty broad day. But yeah, guys, we're just a couple minutes out from here to the manufacturing PMI number. I'm very curious to see what we get on this. 2 minutes to go. Again, what I'm looking for is to see if I'm thinking of what I let's talk about what I hope and dream for. I would like to see PMI numbers come in around expectations. Because I want it to be under 50, but not by much, right? You want to see, remember, 50 is the separator between growth and decline. Manufacturing has been in a decline for some time, you can see, but it's not a drastic one. So I'm okay with it being at this level because this is helping us get to rate cuts as long as we stay in that range. But I don't want it to go much lower than that, and I don't want it to be much higher because that hurts the rate cut story. So I really just wanted to come in right around in line with expectations. Around 49, 48.5 to 49 is perfectly fine for the story, right? We're trying to, if we're quote unquote manifesting the soft landing, that's kind of what we want to see, is soft data but not crashing data. So we'll see. Lee, two different groups do the two PMIs. They're after the same kind of concepts, but there's some differences in how they did go about it. I think both are useful. Typically, I lean more towards the ISM manufacturing. I've noticed that it tends to move the market a little bit more. 30 seconds to go, guys. We're going to go ahead and just switch back over here to the, let's go, all markets. Just so we can see what this brings to us. And we got breaking news in about 20 seconds. Let's go ahead and do our breaking news. You got indices on the left, gold in the top right, some currencies in the middle. A couple seconds to go. Let's see what manufacturing PMIs come out today as. All right, the dollar is slightly lower. Dow Jones unmoved, S&P kind of unmoved, Nas unmoved as well. I'm going to guess the number was 48.9. Let's see. 46.8. I was way off. Whoa, that's much lower than expected. I would actually think. Interesting. What was the other data point that came out? Okay, manufacturing prices 52.9. Report separately as an inflation gauge. Interesting. Above 50 indicates rising prices. So we saw rising prices in the ISM manufacturing prices, and PMIs actually came in much lower than I thought they would, or even what the market thought they would. 48.8 was the forecast. You got 46.8. See, I don't love that number, but the market's probably not too worried about it because then they're like, oh yeah, rate cuts. It's kind of the weird, when something is just wanting to be bullish, it'll find its own way to be bullish. But look at this, the Dow Jones actually down. That makes some sense. Dow Jones a little bit more tilted towards the industrial side of things, down 0.22% now. So no huge moves either direction, but slightly lower for the Dow, specifically the Russell, lower on that, perhaps showing, that's dipping more into the weakness area of the economy. When you get into the 46, that's not nearly as optimistic as like a 48.5 reading or a 49. Saw some cool in the economy there. And that's just been the theme recently, right? Cooler than anticipated economic data just keeps coming in. So that really suggests that's just another. We have claims and we had manufacturing PMI, more data to suggest rate cuts are coming. Now, if this tilts too much lower, like if you start to see economic data really cool, what you're going to start getting is concerns about if the economy is really cracking, which is not good for stories like the Russell, which is sensitive to rates, but also sensitive to growth. Dollar index dumping. Let's take a look. The dollar index should be lower, in my opinion, because we had claims and economic data that was cool this morning. Dollar is looking wobbly at this 104 level, but we've said that so many times. So we'll see if the dollar can actually break 104. Anyways, guys, we're going to take just a quick break and be joined by Chris Pulver, who's going to take over the show here for a little bit. So stick around, guys. We got Chris coming on right after this quick break. And then I'll stick around with him for a few minutes, and then I got to jump off for a podcast. So we'll say hey to Chris right after this quick break. Wait a second. What is that out in the water? Is that a shark?
Yeah, thankfully he only took half off my surfboard.
The markets can be a very scary place. Don't go wading into treacherous waters without your EdgeFinder, which gives you market data like the commitment of traders data, retail sentiment, our top setups algorithm, which generates ideas each day for you, and so on and so forth. If you don't already have a copy of the EdgeFinder, we're currently doing our summer sale, and it is our biggest discount of the entire year, no questions asked. If you're waiting for a better discount, you won't get it. Currently, the EdgeFinder is half off, and for stream viewers who are watching right now, we're going to be dropping a link in the chat as I speak, and that link will take you to a direct message center where you can speak to a rep on our team. That rep can get you 55% off so that you're no longer swimming out with the sharks. Get inshore and trade with the EdgeFinder. Check it out, and thank you guys for watching. Back to the show. All right, we're back with Chris. Hey, Chris, happy Thursday, man.
Happy Thursday. What's happening out there with you?
Not a whole lot. We got dollar giving back some of its gains this morning. I was just talking the last 2 hours or so about just the dollar index just being at 104 and cannot crack lower. I want to start here just for a second. Get your thoughts on the dollar index. Are we going to see 104 break? What is making the dollar so strong at this level?
I just think that the market's not ready to run and price in the dollar weakness. I mean, look, 103.90 is my level that we're coming close. So August is typically this kind of transition month, and August also tends to give us these really sneaky breakouts. So I could see it being really choppy right around this 104 level, but the more that gets pestered and peppered and hit over and over, just don't be surprised that the dollar, especially with the rate cut cycle coming into the end of the year, I think that the dollar ends up going below 103.90 and we start looking for a decent run on the dollar. I've not been impressed with the dollar direction the last couple of months. This to me is nonsense because it's not really giving us a lot of good trades individually. You got to be in and out of the dollar for the last couple months. So hopefully dollar trading gets a little bit easier. If we make a nice clean break below 103.90, to me, this is, sell the rallies, and hopefully the dollar continues to trend lower towards the end of the year towards 101. That to me would be a pretty easy trade because as a basket trade, probably the currency pairs I like the most would be Aussie dollar long, New Zealand dollar long, pound dollar possibly having the resiliency. I might stay out of the euro dollar, but then dollar CAD looks like we could drop. There's more dollar yen potentially. Nick, I found something pretty interesting. I know you have to go here in a little bit. But I look back at the history of the Japanese interest rates because I'm like, you know what? I know we've been at negative interest rates for a long time, but how long, in fact? I mean, this for almost 25 years has essentially been hanging out between 0, -1, and like 25 basis points. So right now to go from -1 or negative zero point 0.1 to 0.1 to now 0.25, we're still in this ridiculously easy accommodative monetary policy. It's funny how the market's reacting so ridiculous to, hey, wow, they raised rates from negative zero point 0.1 to 0.25, and it's reacting like the sky is falling. And so I mean, look, I still think there's more of this unraveling carry trade to happen on the Japanese yen, but do we think that the Bank of Japan is going to go raise rates to 1%, to 2%, to 3% to kind of find these like other central banks where, if the US drops to 2.5% to 3% over the next couple of years, is the Bank of Japan going to be right there with it? I doubt it, but obviously it's going to be interesting how it all unfolds.
Yeah, that is. And you're seeing more downside right now for like things like UJ. Seems like the yen staying strong for now. And I think that the rate cut definitely brings a little bit of short-term strength to the yen. But what we keep talking about with this story on the yen is it is the global market trying to figure out if this is cooling in the economies of the world before rate cuts pick things back up, or if this is cooling in the economy that is going to turn into serious weakening of global economies. If you see serious weakening in the global economies, the yen's going to look like a golden relic. It's going to look so strong because then you've got a more predictable, kind of slow growing economy that, it's not very exciting in growth periods, but it sure is exciting to have your money, parked somewhere reasonably safe while the world's falling apart. So that's the question. And I'll say, Chris, I think I lean more towards the soft landing camp as you know, but I can see that the yen long positions could be an interesting hedge if let's say we're just wrong, and let's say that the economies of the world really do go into a period of maybe not a complete global shutdown recession, but if we enter into a prolonged period of not as much growth, not as much excitement, all this stimulus money, maybe all the fiscal spending dries up or not dries up, but we realize that maybe the growth was a little bit, what's the word I'm looking for? Falsely created. I don't know. We'll see.
Yeah.
But
it's fabricated for sure.
Yeah, fabricated. Yep. Yeah, you could see an environment in which the global economy just doesn't see a ton of growth, and maybe the yen just looks like a little bit more stable, a little bit more, kind of a better option. But I'm not personally in that camp, but I can see the hedge idea that makes sense there.
Sure. Well, we'll see how the FXY does. That's pretty much my hedge for right now. And
I like it.
If my stock I've got to break even at 60 because I did protect the downside. Initially, when I got in this thing, it was down here around $57 or like $58 when I bought it. But because of that debit, and that debit lasts me out to the end of the year. So I thought, well, the Japanese yen isn't ready to unravel yet. I'll protect it. But anyway, so my break even $60. If we see a longer run, now that I own the shares, I take the options expirations out of it. If we run up here towards 70 plus, it's worth it. I mean, I'll make a few bucks on the trade.
Yeah.
Can still trade Japanese yen futures, which is fine. Currency wise, I mean, if I look at a pair, I think I talked to some traders this morning about this. Euro yen is an example in the near term. I have a fib drawn from this top to bottom. I mean, I wouldn't be surprised if anybody's lining up like a 1 hour chart to then say like a 15-minute chart. And if we start to see that this is stabilizing and then starting to show upwards, like an upward correction, all I'd look for is if we pull back to like a 38 to a 61% zone. That would just be the near-term bulls correcting. But I mean, you can't ask for a cleaner technical trade than this. We took out lows, we took out lows, we took out the intervention we had back in April and May. If we pull back to a 38250 zone, I think this is a good spot for any type of buyer to be risk-free or protecting some longs if you're going to get long. Or for the swing trader, I think the swing trader is just going to wait for this area, look for a sell trade, and see if we come back and retest the low. Stop loss initially above the highs, but then going back down to eliminate risk, get to the lows, and then see if this is going to continue to unwind. So I think there's good opportunities on the end if you're paying attention. I don't know how fun it's going to be to try to buy this thing because it could be, we could all make a correction in one day, and then we look to see if that swing trade is going to be pushed back to the downside. So I'm watching the yen pairs. Like I said, for me, if I don't trade the yen, no big deal. I'll just stick with the FXY. But the dollar's a big story, man. I think that you got to look. I've been annoyed, like I said, about the dollar crosses the last 3-4 months. But if we get a nice clean breakout coming out of August, I think this like September to end of the year move, especially coming into rate cuts, the dollar could be a really nice trade. And I, for one, would not mind having a 300 to 400 pip move across the board. If you have $7 pairs and you've got 300 to 400 pips across, I mean, you're looking at a pretty good chunk of profit. Probably
Yeah.
close to 2,000 to 3,000 pips.
I think again, if you're more in the camp of where I am, where I think that global growth is maybe temporarily cooling, but may pick up, the U.S. dollar short trade could be really strong because usually when we see global growth, the dollar is usually weaker, giving other currencies, emerging markets, maybe a turn to, and that's overdue. That's a trade that I think we might talk more about in the future, Chris, because I know you're long China. There's also like emerging markets trades that you could look into. There's other places that have the U.S. outperformance makes U.S. indices just so attractive, so interesting to everybody. But there is a longer term theme that might swing back the other way, which is other economies of the world might pick up the pace and really see their stock markets make some big moves. Could be worth exploring in the future as you've got FXI. I want to talk more on this, Chris, but I got to hop off. I'm gonna let you take over here for a little bit. Guys, stick around with Chris. He's got some great concepts, great things to discuss. Before I step out, he's got his own YouTube channel, social medias. You can find him. We're going to drop the links to those in the chat right now. You can find him on Twitter. You can find him on YouTube. So please support our guests. We always ask that you do that. They come on, by their own will to come and contribute to the A1 Trading Show, and we couldn't do it without them. So, Chris, thanks for taking over. You got it from here, man.
All right. Thanks, Nick.
All right, man. See ya.
All right. Bye-bye. Okay, there are a couple of trades I'd like to take a look at here. So given the little drop we've seen, the markets have been pricing in some obviously rate action. So if we take a look at the US 3-month yield, okay, this has come down about 30 basis points. We've had a high around 5.55. We're trading at 5.27. What we are noticing with this discussion of the US central bank, the Fed, cutting rates or likely to cut rates coming September, possibly November, but seems like right now September, December are pretty high probability. November is like the wild card of, are we going to get 3 rate cuts by the end of the year or 2? Either way, I think rate cuts are coming. We're starting to notice that the market's taking some action with yields dropping. So with yields dropping means that bond prices are going up. So I have a 1 to 3 year, the 7 to 10, and the 20 year. If you take a look at these are all doing pretty well to the upside. So SHY is heading up. IEF is heading up and TLT is heading up. I'm going to look at a couple of puts in these, and I think I'm going to go out a decent amount. So let me take a look at IEF here. I could probably just stick to like the SHY and the TLT. The 7 to 10 year, or the IEF is the 7 to 10 year, and the TLT is the 20 year. So if I went out, let's say to the end of the year, December 20th, how low can I go to get some credit for this? So if I went out to, can I get something below like $88? Not, oh my gosh, never mind. If I want to go to a technical level that I'd like to put a put in, I'm going to get 5 cents credit. No thanks. I don't want to jump in. I mean, I'm long TLT. We're sitting up at new highs. Here's my position on TLT right here. I did a debit on this one of $14. This is out to 2026, by the way, so I'm way out here on the bond situation. But if I show my position on TLT, I have an $82 call, and I paid $14.21 for it. Right now, it is trading for $15.75. So I'm up around $1.50 on this per contract, which right now at 4 contracts, I'm up about $400. My goal on this one, because it's uncovered, I'm not selling against it. My goal is to try to get this. If TLT can rip up here towards $100, then that would give me $18 of real value. Okay, $18 of real value, minus the $14.21 that I paid. If there's any extrinsic value, maybe this is up to $18.50 or $19. But basically, let's just say I just do the math here, and I'm up about $3.80. Well, $3.80 with 4 contracts is going to be about $1,500. It's not, it's not like an awesome, ridiculous baller trade. It's a nice solid gain. It's diversified like I tend to be. So I've got some holdings that, Nick said earlier, I'm in China. I've got some crypto with Bitcoin exposure. One thing that's been interesting is watching the difference between an IBIT versus a BITO. That's not me singing like Old McDonald. That's me talking about, these performances and these ETFs have been very different. So BITO, which I trade options around, is down to 2103. This does not look anything like Bitcoin. If you take a look at IBIT, this looks a lot more like Bitcoin. You take a look at Bitcoin, this looks obviously like Bitcoin. We're trading at 64.5 right now. To me, I look at Bitcoin where we had this little bear trap. We ripped up here. I'm looking for a little indecision. If we can hold this level and head higher, another thing that I think helps with the Fed cutting rates might be, Bitcoin gets a little bit of a surge to the upside. Maybe we're having this conversation with 100K by the end of the year or early into next year, with the rate cut cycle kind of taking full effect, and seeing something where, what's likely going to happen with the new president, whether it's Kamala Harris or Trump. We're probably still going to have fiscal stimulus. We're probably going to have the Fed, if we're easing in monetary policy, the Fed might be also willing to backstop a couple things, which means there's more money printing. So gold looks good in that sense, and Bitcoin looks good in that sense. And the dollar, like I said, I'd like to get a basket trade going to my Forex accounts for the dollar to get weaker. I'm just not quite convinced that the dollar's ready to make that full move. But I'm saying this from experience. Okay, August is a very slippery month sometimes. Sometimes August is very dull and very indecisive. Jackson Hole usually starts to spark some interest in volatility, but August is usually a month where if I just want to kind of give you a little heads up here. So August trading, let me just draw this out here. So August trading, okay? If you see indecision, look for sneaky decision. Okay, what that means is if you're looking at prices that are going sideways, everything's contained. You can identify resistance and support. You identify wedges and patterns that are showing like no real sign of confirmation to break out. If you see indecision, look for something to then decide to break out. Look for confirmation above a high or below a low. August is sometimes that sneaky month. I've seen it happen to dollar crosses. I've seen it happen to the yen basket. I've seen it happen in currencies a lot in the Forex market. In the stock market, same type of thing. If we're sitting here with the Russell at these higher highs, but not necessarily all-time highs, we're going to get a summer breakout, maybe. Maybe we still have this rotation as we come out of Jackson Hole going into September as the market anticipates the rate cut from the Fed. If we're sideways, again, look for some direction. So historically speaking, let me pull up the EdgeFinder here. EdgeFinder. Let's go to the what did I want to look at? Oh, the seasonality. Okay, so we'll go seasonality scanner, month to year. There we go. This guy. So on the S&P. Okay. So we go S&P for the last 10 years versus this year versus the 5-year average. Look at where we are for July. Okay. So July is actually flat right now because of that recent correction that we've had versus a historical backdrop, which is 10-year average of July is 2% positive and the 5-year average is over 3% positive. This year has not delivered. Look at this. I mean, this is kind of wild, right? Some of the swings we've seen in the markets, month to month. But my point is, as we get into August, September, if we are down in August, or I'm sorry, down in July as we finish the month negative, you got to wonder if August is going to be more of the same of just a sideways month or kind of this indecision month where it's a transition. And then September usually is not a great month for stocks. Historically, September is bad. Historically, September kind of lingers into October, and then October kind of takes it where it stabilizes, and then October to the end of the year, we typically have some type of bottom. I don't think this year is necessarily any different. If we come out of summer, we can't take out all-time highs, right? If we're sitting here with all-time highs that can't be broken through August, don't be surprised if we have more of a pullback coming for August, September if things are a little bit nastier. And then it's maybe the rate cut could kind of save things end of September, and then the market gets a little bit more excited and starts to rip to the upside with the October to December rally. So just want to point that out. I mean, let's go into SPX for a moment. I saw this chart yesterday when we were talking. Okay, just take a look at the technicals here. I mean, it is very possible. This goes back to a couple of videos I did. I just published this on TradeView. I put this on Twitter and all over the place. But if we had this market go high, low, lower high, lower low, I just want to ask you all out there, how many of you would be surprised after a 5-wave move, 1, 2, 3, 4, 5, how many of you would be surprised to see just a 1, 2, 3 correction? I would not be. If I'm talking to anybody out here that understands wave structure, Elliott wave, that is what is textbook. Okay. So there is a chance that yes, it's been a good week. My Qs are hanging up above 460, which is what I need. My IWM staying above 218 so far, which is what I need. But I'm watching these levels closely. I've got to make some decisions on a couple of pairs. I mean, I was assigned on Tesla early this week. I'll debate on that one. I was assigned on Google this week. I'll debate on that one. I want to see if my credit spreads actually pay me by Friday. If they do, then I might still take ownership and then flip the stock for a little repair over the next couple of weeks and try to, they're not bad. I mean, if I own Tesla and I own Google, I'm not worried about having those in the portfolio for the short term and trying to make a couple bucks by lowering the cost basis aggressively. But because we've broken some of these trend lines, this getting outside this trend line, pulling back to the backside of the trend line, if we start to push a little bit lower, I just look for that to be a 1, 2, 3 correction. That's it. So 1, 2, 3, and that's against this resistance becoming support. And I think there's a good chance to bounce from there. Now, could that be August to September? Yes. Could it be? Yeah, I hope it is. I hope it's that simple. And then once we find this area, there's a lot of buying interest and off we go. Now, we still have earnings today, which are pretty big ones. So Meta had good earnings tonight or last night over well, we had good earnings. We beat on top and bottom, so EPS and revenue were solid on Meta, but we're not breaking highs. Now, I got into Meta with a credit spread. It was a 520 by 515, and then a 420 by 425. I collected $8 of credit, and I just closed it this morning for $7 debit. So I'm up $1.10 per contract. So for a 1 contract trade, it's $110. For a 10 contract trade, it's over $1,000. And all I did was I just took out some of that quick decay because price did push to those in the money prices that I needed. So Meta cooperated, MasterCard cooperated. I took the assignment on Google, which is trading. I've got a 170, so I need to see if this week we'll find out tonight because Amazon and Apple both have earnings today after market. If they're both good, it might be enough to stabilize the market for this week. And that's fine because I'll keep the short-term profits, hopefully. And Google, I might end up keeping the shares. I was assigned at like 190, but I have a put to, kind of lower the cost basis relative to where current price is at. But ideally, this kind of if this happens, this is awesome. If we're back down below 170 by the end of the week, which kind of a catch-22. Like, do I want it to be below 170? For this trade, yes, but for the broader market, no. But either way, I'll probably end up keeping Google and repairing it over a couple of weeks, and I'll probably end up keeping Tesla and also repairing this down a little bit for some ownership. So I have some ratio spreads in here. Anyway, doesn't matter. You're like, come on, clown, get to the charts. So I'm just saying this is the stuff I got to manage. So my list of trades that I need to manage by the end of the week I'm just going to make a list, and then we'll talk some analysis and throw out some. We'll throw out some pairs. So I need to watch Apple because I have a 220 bull put spread. I need to watch Amazon. I have a 185 bull put spread. I need to watch the IWM to see if it stays above. So I'll just put the numbers here. Apple greater than 220 for 220 for profit. Amazon if it's greater than 185 for profit. IWM if it's greater than 218 for profit. QQQ if it's greater than 460 for profit. And I have Meta, which is closed already for profit. So MA is profit already. Meta is profit already. And then I have Tesla would be potential ownership, potential quick repair, and Google, potential quick repair. What else? I've got to watch Pfizer. If it's greater than 30.50, it gets called away for about $2,500 in profit this week per account. FXI, I need to look and see if it stays above 26.50 for profit, and that's a repair trade as well. And KWeb, if it stays above $26. Okay, so this is my summary for the week. If these prices stay above these levels, these are all profits for me if this is the case. If that's not the case, Apple's a small risk. Apple has earnings. I would imagine it's pretty steady earnings Thursday after market. Maybe Friday ends on a high note. Historically speaking, Fridays tend to be where the market makes highs for the week. Thursdays and Fridays are typically highs for the week. So we'll see. We'll see how stable things are at, but these are things I need to watch. Okay. All right. Let's see here. S&P falling. I mean, it's down from the high around, it's just shy of 555 this morning, and we've dropped around $4 to $5. Here's the SPY. Let me go short term here. So SPX, I've got a centered trade around. Let me see where I put my positions this morning. I centered this around. My sell trade is 5,500. So right now I'm sitting right in the middle. I centered it around 55.50. I went up to 85. It went down to 5,500. My put side is probably being threatened right now in the SPX. Let me check this position. If we have some chop today, this should still be okay. Here's my position. We're trading right around my break even. I collected 385. It's trading for $4 right now. So I'm still watching and monitoring this. If the put side is going to be threatened, then sure, I might take a small loss on this. But if we just chop around here, which I could see happening for today, if we go, let's say, we gapped up, we faded. If we oscillate here for the next hour or so, then that's probably enough for me to extract my 15% take profit and get about $55 on the SPX. Okay. Yep. So we'll see. I mean, if it dumps hard, then yeah, that's an issue. But if it just stabilizes and we have a little high, a little low, and it just kind of stays sideways for the morning, in the next maybe 30 to 60 minutes, this trade should close up for profit. I did the same thing yesterday. Even with FOMC yesterday, I was able to close out here for a small profit. I grabbed about 15 cents credit, which again, not excited about that. Usually my wins are about 50 to 60 cents on the SPX. So I'll keep an eye on this one for the morning. So SPY wise, SPX wise, I'll watch that. Let's take a look at our stocks. So index wise, with earnings today on Apple and Amazon, I do wonder if the market is going to, give it another lift. The market got really excited from Tuesday to Wednesday, and somehow that excitement seems to be fading today a little bit. I know Nick pulled up the heat map. I'm going to pull up the same thing. So let's go FinViz heat map right now. We're looking at, there's some broader red at the moment. I mean, we've got your household names, your Microsoft, Nvidia, Apple, Google. Eli Lilly still doing no wrong at $830. Thanks, Ozempic. I feel like that's going to be a commercial at some point. Like, thanks, Ozempic. People will be eating McDonald's and 20 pounds lighter. What's up, dude?
Hey, Chris. How's it going?
Good. How are you?
Pretty good.
What you watching today?
Well, I am watching the Qs. I was short earlier this week, and I'm kicking myself because I was up, and then Wednesday came around and reversed everything.
Okay.
But, I'm not really I don't know how confident I am in an AI tech rally still. If anything, I see more in the value plays like Dow and blue chip stocks. Um, I feel good about Russell, but that is also down today.
Yep. And down pretty hard, man. I mean, the Russell's down 1.7%. I need to see if my 218 level holds this week for a bull put spread to be profitable. The DIA, maybe this, and again, we're going into August. I mean, don't be surprised if we see July high pullback. I mean, this is where August could be, right? August could be indecisive on the Dow before we start pushing higher. IWM, I think looks pretty good, but it's going to be volatile, man. We're getting some heavy call volume on the IWM. It poked the highs yesterday, but that was clearly a fake out and a bit of a bull flag after this. I think this was a pretty solid ascending wedge, and so we break out. We're hopefully flagging right here. I would not love to see the IWM come all the way back down and retest this low. Or I'm sorry, this high of resistance becoming future support. I mean, that trade is okay, but I'd almost prefer to see this stay kind of in a flag pattern where it just stays in this area to show that buyers can still take it up higher. I'd love to see the destination still at 240 to 245. I mean, I've got a couple of trades on the Russell that pay really well, but I realize that maybe this isn't ready. Maybe we're not in this full on broad market recovery yet. The Russell is still going to lag behind the big Mag 7s and your top 10s in the S&P and the Qs. I like the idea of value. I think the best value play right now is just to stick to the Dow, to be honest. I think the DIA is an easy way to trade value. It's diversified, it's price weighted. So even a mega cap stock like Microsoft that's in the DIA doesn't matter when it's price weighted. It's just one tiny little portion of it, just like everything else. So we're getting the VIX spiking up a little bit today. We have not seen the VIX get up to 19 or 20. So I still wonder, if we have additional volatility, does this poke up here towards $20? I'm still hedged like crazy to the downside on ES and NQ. Oils, I was going to say oil was stable as of yesterday's price, but kind of seems to be giving it back. So, yeah, man, a lot of things seem to be questionable.
There's something to look at too.
Yeah.
On the technical side. So if you pull up NASDAQ,
okay.
We had
NS 100 or what?
I got it up here. Yeah, NAS 100.
Okay, yeah.
We got this sort of downtrend in this channel. We broke out of it yesterday, came up, test the 50-day moving average. It's also a previous level of resistance or support from this is June and July. So we came up and tested that this morning, pulling back. So this could be like, the problem here is I thought we were going to test one of these two levels, which we did, which was the either the 18.4s or the 19.4s. So we hit that. And then from there, I was saying there needs to be a decision. So if we broke higher, and if we do that today, this is more so this is a technical reason, but if we close higher than this 50-day today, I feel less worried about another leg lower.
Okay.
But the fact that we're rejecting it kind of at the start of the day is a little concerning. I mean, who knows where it's going to go? We moved 4% yesterday on the NAS.
Yeah.
So this could be just as big a move. But I'm not too confident yet. I'm looking at this and kind of wondering where it's going to close, and depending on where it does, I think I might either take another short or I might look for longs, just depending on where it breaks or closes today. But I don't know. What did you take from yesterday's move? Because that was the biggest move we've seen all year. Was it earnings or was it the Fed? Was it both? Like, what do you think?
I think it was both. I think that the market was excited to get a little bit of a boost in earnings to say like, okay, we're back in earnings season. It was a Mag 7 like a Microsoft, one of the top 3 companies in the world, beat top and bottom estimates. Meta did the same thing today for a top 10 stock. You got Apple and Amazon. Like here's the deal, man. I see this, right? This is the QQQ. Last week was a crazy week. We did tap the lows, okay? but we tapped the lows and we reacted aggressively off that. And I just think that that kind of 10% level was maybe a bit more psychological, and the market got all excited about an earnings report that was okay. You know, AMD was positive, Microsoft was okay, and they both kind of stabilized things for a big rip yesterday. I do think the market was a little bit more anticipatory for the Fed rate decision, just kind of push things ahead of time. I was in the background listening while you guys had the stream running for Powell's press conference. You know, he essentially was saying things look appropriate for a rate cut, but we're not going to do it right now. Like, no action right now. It's like, we get it, dude. Like, we understand you're pulling back because there's no action today, but everyone just kept asking, like, it looks like September, looks like September. You just like, well, we're not making decisions today. It's like, dude, does Jerome Powell know that the CME watch tool exists? Because I think that he does. And it's like, there's nothing that he can say that is going to change the market at a 90+% probability that it's going to all of a sudden switch and be zero. So I mean, I think it is a built-in, baked-in cut in September that now the market is just more interested in, do we have earnings to support a healthier recovery, or is it only Mag 7 and then we're looking at, the overall broad market, like we're still not there yet. I mean, look, today's price action, I could see it got a little exciting yesterday with a huge gap. I mean, we had, these 1.5% gaps over the last couple weeks, and then we had a 2+% gap, which was a monster. All I'm thinking, I mean, like, example, what happens if we fill this gap today? Like, that to me is not a good sign, right? If we fill this gap today, that's a terrible sign going into August, because I feel like all of a sudden this low becomes vulnerable, that momentum seems to be shifting stronger. So for me, I mean, I'm talking even more short term, as long as we hold the kind of yesterday's low where we had, the close, the open, if we hold that level and stabilize for today, then it's a little bit of a sigh of relief, where tomorrow with Apple and Amazon, if they beat earnings, then we could be slightly higher on the week. But I don't think we're going to test last week's high. If we do, that's a crazy week, dude, because that would be, $27, $28 from high to low. And this week has already made like a $17, $18 rip as well. So we're getting some big swings in the markets, man. I mean, this is from this morning. We've gone up $21, almost $21.50 on the Qs after a drop last week of like $28 or $29. Yeah, that's a crazy swing the last couple weeks.
Yesterday's move took out, like, let me see how much we were down on the month at the start. So we were down like 5-6%. And then yesterday's move alone took us back up to a minus 1.7% on the month.
Yeah.
So what looked like it could have been a bearish reversal, if we saw that inverted hammer turn into, I don't even know what you would call that, but that's just extremely mixed, in my opinion. This month, I have no idea. On our tool, it's suggesting that it's overextended, but this can last for months. So
sure.
We don't, or at least I don't really know what's going to happen. I'm just cautious to both sides. So I've got, short term, way out of the money puts. So they're very cheap. And then I'm also trying to have these, verticals to the upside on the SPY or the Qs. So that could be, what would hedge me is the puts. But right now, it's just hard to tell. And we have Amazon. Maybe we want to look at that and see what we could price out there for their earnings. But
okay.
I remember last time they didn't move too much.
They did not move that much. I'll give you the numbers here. Price action in the chat. I do see your messages. You just can't type 10 messages and have me read them all. So I'll get to them. I'm just having a conversation with Frank. So let's go Amazon right now. And so a couple things here, Frank, on my chart. What I'm looking at here is if we hold, let me change the color here. So we've come back down this morning. We're testing kind of this intraday chop from yesterday. Like I said, as long as this gap, I think, has to hold, this would be good to kind of bounce. I mean, my gamma level today that kind of sticks out is the 552. So if we just kind of oscillate for the day and we just kind of settle in around 552 or so on the SPY, like I said, that's stable, and then we see what Apple and Amazon have to offer. But anyway, that's what I'm watching in the near term. Let me put that back up. Let's go earnings on Amazon. So we are expecting to see about an 8.5% move. This is fairly conservative, I would say. We've got 8, 11, 12, 14, 12, 9 and change, 9, 8.5, 8.3. I think 8.5 is safe. So let's do an 8.5 times the stock price of Amazon, which is trading around 190 today, or was. Now it's at 188. Okay, we'll go 188. So we got an 8.5% move expected on a 188 stock. We're looking at about a $15.98 or $16 move. So a couple ways I can trade this. So right now, I already have some exposure on Amazon with lots of trades, but just for this week in particular, the trade I have on Amazon is right here. I do a 185 by 182.50. I just did a two contract bull put spread. So if Amazon pops in with stable or better than expected earnings going into Friday, it's only one day to manage the trade. If we stay above 185, I'm profitable. So I'm hoping that we have a solid earnings report. We've had a decent correction in Amazon. Let me go back to the daily chart here. I mean, this has been a fairly decent correction from high to low. I mean, we got up to 201. We blasted all the way from, I mean, that's a big drop, dude, about 25 points from 201 to 176. I still have a measure move on Amazon for Head and Shoulders to get us up towards 210. And I'd like to see if just earnings can kind of keep it like stable, right? I mean, if it breaks lower, like I'm still going to own Amazon and I'll own it forever. I think this is a great company to have in the portfolio, but my break even is 137. The more I can use options to lower my cost basis, the more profit I end up making when I'm ultimately going to let go of it. But point is, if we have we're looking at about a $16 move. So a couple ways we can trade this. And so if we're taking the trade based on earnings, I don't think we can do a one-day expiration. I think that's a little crazy. It's nice if you're going to be selling options that have that immediate decay because you essentially take a 0 DTE trade. But you never know if Amazon's going to blow it out and have, for example, if I did an iron condor, which if you can see my chart here, this is the expected move, right? We're looking at about a 1160 move per tasty trade with an implied IV at 66. I think we're going to go a little bit higher towards like 16. To be safe, we could probably do like a 20. Like let's go out to like a $20 move and see if that actually pays pretty well for some type of sell trade. So if we're trading at 187, let's go to how about this, Frank? Let's go to the 210 or let's go to like the 205 or so and say, look, Amazon, if you can't break these all-time highs, we're going to sell. We're going to sell you. So if I did a 205, okay, 205 by 207.50, I can do a bull put spread, or I'm sorry, bear call spread, but that's a 250 spread that's only going to give me 30 cents. That's not a good trade, in my opinion.
But that's for tomorrow, though, right?
Yeah, it's a 0 DT. So as far as the profit, I mean, having 30 cents divided by 250, you're only getting about 12% of the premium, which for a 0 DTE, I mean, I don't know, 10 cents on the dollar is not that great. I'd like to have a little bit more if the IV is a little bit higher. Maybe I'm just too far out of the money. Maybe this is better if I did like the 200 as the top. Now we get 50 cents. That's a little bit better. I mean, we'd have to hit recent highs, right? But at 187, if we have a $15 or $16 move, that's enough to hit the highs. So I don't want that position to be threatened. That's kind of my point. So if I get out of the way, I think a 205. We can make this a little bit wider. A 205 by 210, we get 50 cents, but we're risking $5. So my risk is 450. My take home is 50 cents or so. That's to the upside. To the downside, I would say if we did like $20 to the downside, 165 if there's any premium there. If I did a 165 by 160 on the nose, I don't love that trade, dude. I mean, you're talking about $4.50 of risk for an 80-cent credit. So you can see, I mean, the risk reward is not great. There's like three ways we can spin this, but I can make $80 with a probability of about 81%, which is okay, but I'm risking about $420 on the trade. Do I love that trade? No, but if Amazon doesn't deliver any type of big movement, then that trade's spot on, and by tomorrow, that trade's going to be profitable for 80 cents. Not bad, but would I trade it that way? Probably not. Here's what I would personally consider doing. I'm keeping the bull put spread as is. I'm already pretty exposed on Amazon with some positions here. Like this is one account, and everybody has this. So I've got the 185 by 182.50 bull put spread. I have a bunch of sell puts and some ratio spreads. and that's pretty much it. So I'm just like stacked in with like, 140s and 135s and 130s and 125s. If Amazon comes down those levels, give me the shares. I'll take shares. I'll take 500 shares of Amazon at those levels. So that's my play. But for this week in particular, I just want to see if it stays above 185. So earnings plays, either Iron Condor. But let me ask you: are you happy making 75 cents and risking $4.25?
Not normally, but this is
Okay.
1 day out.
It is, and again, for a 1 day out move, you're looking at about an 82% probability profit. I'm going a little bit further out than what the Tasty IV shows at $11.61. I'm going out to calculate what I think is a conservative measured move around $16. So the 185 to the 165, that's $20. That's plenty wide, and the 185 to 205, that's $20. I mean, unless we have a blowout move, $20 is wide enough that I think that would be a good 0DT trade. So I'm going to do this. I'm not going to take the trade, but hypothetically, I want to track this trade because I think this is a pretty easy 75 cents to get. So I'll put this in as just a, let's say this is a Frank and Chris discussion. If I did the 205 by 210 bear call, and I did the 165 by 160 bull put, collect 75 to 80 cents credit. Okay, and we have about an 82% POP. So probability profit's about 82%. I just want to track that trade just to see if that was one trade we did on this earnings report, did it do okay? It's probably a trade that has a high probability of winning. I think it's a good trade. But what else could I do?
It's going to move more?
What?
Maybe we can
Apple?
look at Apple instead.
You think Apple's going to move more? Oh, dude.
Than Amazon?
I mean, well, I mean, volatility-wise, Apple should not move more, but we'll find out. Okay, let's go Apple.
I think it moves more.
Okay. So Apple, it has an average of about 4.8. So 4, 4, 4, 5, 5, 5, 5, 4, 4. So I think 4.5 is the calculated move on Apple. So from an earnings calculation, from the actual earnings history, we shouldn't move more in Apple. Now, Apple has been way more volatile than Amazon. Apple's been, lingering in the AI space a little bit more. They've done the buybacks. Apple's sitting on ridiculous amounts of cash. I've said this for a long time. If I could buy a corporate bond from Apple at 5% yield versus buying a government treasury at 5% yield, I would take Apple over the government. As far as like long-term, like Apple is probably healthier than the government, with the exception of they can't print money. Anyway, so 4.8 is the average. We have a couple over fives. I think 4.5 is going to be a conservative but safe play. So 4.5%. The stock price right now on Apple is around 220. We're trading at 220.77. So times 220.77. So we're looking at about a 990 move in Apple. According to the IV here, it's about the same. Apple is expecting IV rank of 81, an $8 move expected in Tasty's platform versus an $11, almost $12 move in Amazon. So from a sheer mechanics, Amazon should move more than Apple. But you have a hunch we're moving more in Apple. So what do you want to do? Same thing? Do you want to like Iron Condor? You want to try to collect the premium, be a seller for a 0 DTE? I think that's a good play for a 0 DTE, man. I really do.
I don't know. I feel like last time the Iron Condor, if you're betting on volatility from what we priced out for Amazon, did not work. So you could even go, I feel like 7 days out, potentially collect more premium.
So you want to sell the Iron Condor and go out a week and collect that premium.
Because I remember we bought one last time and it didn't go where we needed it to go. So the same.
But if you bought Apple, it went a ton. This was the last big earnings print on Apple was here. This one with a reverse Iron Condor went a ton. That was an easy win. So Apple did on the buy side pay out really nicely. Amazon didn't. So here's my thinking. You like the idea of selling an Iron Condor and going out an extra week? Fair?
Yeah.
Okay. So let's go an extra week and let's track this one. So we'll go August 9th. We're
I
trading at
probably
two.
wouldn't take it, but yeah, I'd want to see.
Okay. So we're trading at 220 right now. We're looking at about a $10 move. To be safe, if we really wanted to collect a lot of premium, then we would sell the 230. So you would sell the 230 call and then buy the 232. So create that little spread. You're collecting 55 cents on a 250 spread. It's about a third of the width, which isn't terrible. 50 cents out of 250. Oops. You're looking at about 20% width. It's almost there textbook wise. It's okay. And then if we did the $10 move this way, we'd create a bull put spread. So for $1, you can grab $1 out of a $5 risk. So your credit's 1, your risk is 4. This is out to next Friday. Now, personally, I think this is a little tight. So if the move is expected to be $10, I don't want to go right at $10 and have this thing like poke the highs. So I might try to go out a little bit further and
Yeah,
maybe
what would
do
be like a 240, 241, and then
okay. So you want to go $20? You want to try $20?
yeah, I mean
Okay,
it's probably going to be pretty cheap.
It'll be worse. So you're going to collect way less credit. You're collecting about 40 cents now, but your risk is 250. So collect 40 cents, risk 250. It's not terrible. I mean, I've seen worse setups. I've seen 10 cents to risk 90 cents.
It did work that time though.
It did work. I know. I'll give you enjoy those 10 cents.
But
All right. So the 235. So if we went up, this is going up $15 and going down $20. So actually, I can tighten this up. Let's make this a little bit better. This can go up to 205 and 202. Okay. So we can make 55 cents and we go $15 wide. If I want to go to 240, like you said, you're going to see the premiums are going to be less and then go down to the 200. So now we get about 25 cents for a $2.25 risk. So it's not a lot of money in profit for the risk. Okay. I would be, I would say this, I'd be comfortable if I did like this trade. It's a 84% probability. We're outside the expected move by quite a bit. This is almost a 2 standard deviation move, by the way. So we're expecting $10. This is $20 outside of current price. I would take this trade and probably do a 4 contractor simply because if I do 4 contracts, I can make $100 with a high probability. And if I'm wrong, I'm risking less than half of 1%, actually less than that even. So it's manageable. I would say for the sake of tracking it, I don't mind this being a trade that we say, look, we talked about this one if it works out. The one thing about this one, though, is we are also going to be going out a week further. So if Apple, pushes higher, pushes lower, it will threaten one of these, and this will probably not be this is the downside. If you collect 26 cents today, the amount of capital efficiency of you can't really take half profit on this one. If I'm going to say, hey, I'm in 26 cents of credit, I'm going to close it for a debit of 13 cents. I mean, the amount of time you're going to have to wait for a week to get a 50% profit, that's a lot, because the amount of sensitivity, if we go up, this becomes $1 easy. Like my 25-cent credit becomes $1, $1 risk real easy. So that's the only drawback that I see is I don't really love that trade because the risk is way higher up front. To risk $900 to make $100, that's essentially like, making 10 cents to risk 90 cents. Right.
wait, let
I
me
don't love
ask you
that trade.
something.
Okay.
Why not keep the sell legs close to each other, like towards being more in the money?
Okay. So you want to
Because
go.
No. Keep your buys. So you buy your call and you sell a call, or you buy a put lower, you buy a call higher. Keep those where they are. Now move the sell legs down to
closer to the expected move.
Current price is 221.
Yeah. So you want to you just want to make the spreads wider.
Yeah, because you'll collect more if it stays.
You will, but look at the risk now. So now let me go back to one contract just to keep this simple. So if I go one contract or 8, one contract, I can collect the 267, but I'm risking about 730. Now within this is not a bad play for just money. I mean, it doesn't take up a lot of buying power. I'm still defining the risk. The one thing you can also do here, if Apple were to drop, you can actually turn this into ownership. I mean, I would be okay on the sell side. If this thing drops hard, I wouldn't mind taking ownership of Apple simply because I could own it and then I could quickly repair it with, going out. I mean, look at this, dude. If you sold a call at the money, you're getting $6. I mean, a 1 week out, you can get $5 or $6 to lower your cost basis. It'd be easy to repair the trade if you have the capital to own the shares. So I could do that. But we collect $2.67, which means we're risking about 7. So it's almost there to collect about 30 cents on the dollar, right? 30 cents out of a $10 wide spread. So you want to collect $3 out of a $10 wide spread. We're collecting about 270. So the premium's not quite where we want it, but it's close. And there's probability of profit now is about 62%. But the break even, the nice thing about this trade is the break even is now up to 232 and change, and it's down to 207 and change. So that's outside the expected move, which is kind of nice. So again, for the sake of tracking, I'm going to track this trade. I think this will be interesting. I'm not going to take this trade just because I'm already in Apple with an earnings play. If we stay above 220, I get paid. That's fine. If it dips below, I will probably take ownership of Apple and repair it. I don't mind like taking a flip for maybe a couple of weeks, lowering the cost basis by a couple of bucks. So anyway, just food for thought as we come into earnings tonight and see what price is doing tomorrow. So for tracking sake, we're going to sell the 210 put, buy the 200 for a $10 wide spread, and then sell the 230 and buy the 240. So let me get that up on my chart here for Apple. So we'll go Frank and Chris. We've got the 210 by 200 bull put, and we have the 230 by 240 bear call, 2.65 credit, and then you have a 7.35 risk. You're looking at about a 62% POP, but the average move is we're expecting a 9.96 move. So the good thing is we're collecting the profit on the ends of that expected move, but there is risk in the trade. So the nice thing is a trade like this is we could, if price does cooperate and we don't see a big reaction out of Apple, then within probably if we took this trade today and you go over the weekend, what's kind of nice about this is as you come into trading on Monday, if Apple is here by Monday, this is probably going to be trading for like a $2.25 to $2 debit and allow you to have some profit up front. So if you want to go after like a 15% take profit or 25% take profit, you could probably see it over the weekend if price is pretty quiet coming into trading tomorrow, which isn't bad. But going all the way out to next Friday, you have that little outlier risk of if things get a little bit, testy on the highs or the lows. But I think for just discussion today, it's a good trade. I think it's worth tracking. I think it's worth tracking. Okay.
Yeah,
but like
I
I typed up
agree.
earlier, I like it. Because the other side.
I know this sounds.
Go ahead.
Sorry, we're like cutting in and out. I think it might be my computer or something, but
Oh, it's okay.
I was
interrupting
just
you.
gonna say that I think I like the I know this sounds crazy, but sometimes when you bet really small on an outlandish play, I wonder if that can work. Like last time when Apple moved so heavily, or last time when Google moved so heavily, those were very cheap options if you were to go out of the money like that. So I'm wondering, I know buying options is usually a losing battle there.
Okay.
But when it's super cheap and you have other plays running, like you're selling for premium, you're getting a more steady income from like actual strategies. What would like, I wonder how much it would cost versus like how much it could be worth if you were to buy way out of the money option calls or puts on things that are 11 cents with under 20 delta or something. Seeing if that were to work out, and if it doesn't, you lose 11 cents.
Right.
But if it does, you could have like, I don't know, a positive $5 or something.
Yeah. So give me an example, because when you're talking about a delta of 10, you're looking at a 90% loss rate. So, and that's not a bad thing, because if it does pay, you're getting paid like 9 to 1, 10 to 1. You don't need to have a lot of winners to do that. You know, a 9 to 1, 10 to 1 payout is awesome. I mean, you and I talk about the Big Short a lot.
So like
That's
when,
what
when you're
that's what
playing
the garage
earnings,
that's what the garage hedge fund
yeah.
was. Okay,
And
I've
when
got
you're
218
doing earnings, stuff like that can happen. So it's almost like, what if you bought calls and puts way out of the money, and you would lose 5, 10 cents, 20 cents for the opportunity of making like $5, $7 on that.
Okay, let's find out. So for Amazon, let's talk about tomorrow's expiration. So let's clear this trade. If you wanted to go out of the money, so we expect the move on Amazon to be about $15, correct? Give or take.
Benji, what'd you
that's
say?
right. You expect the Amazon move to be about $15 or $16, correct? Like that's what we calculated.
Sure.
Okay. So we calculated roughly a $15 to $16 move. Now, IV from the Tasty platform says about $11.50 move. Let's just say you want to pay cheaper. We're trading at 187. Let's go to a 192, or sorry, let's go to like a 202. If we hit this 202.50 or 202.50 call, look, I could pay $1.41, and right now, if somehow this gets in the money for tomorrow's trading, this goes from $1.40 to like $6 overnight. That's a good reward to risk trade, right? I mean, there's no cap, but you know, am I comfortable with a 85% chance that this trade becomes worthless by tomorrow? If you're comfortable with that risk, that's the trade.
And that's the problem. It's like it's too close for you know, it's got to be further out to be cheap enough, and the odds have to be very low. Which, I mean, it sounds dumb, but if it works out, it's really good. So I don't
here's
know.
a question.
I was just curious. But
dude, this is a totally fair discussion. So I think a question is this: is it fair to say that? Do you think? And I think this is valid. Will Amazon get to highs again by the end of the year? I mean, okay, so we're trading right now at 187. Will Amazon get to 201 by the end of the year?
That seems very probable.
Right, I think so too. So if I went out to say, let's just go to the end of the year. Let's
tomorrow,
go to right. So let's go to December. Let's say that Amazon, you can see my stack puts here by the end of the year. I'm just trying to rake in a bunch of premium there. But if we said that this is going to go to the end of the year, you know, about $200 or so, look, I can do a $200 call at 12.15, and look, I'm going to pay $1,000. I'll pay $1,200 to say this can get back to the highs. Now, currently, if I did this and I go out of the money to $200, it's still a 40 delta, which is not like crazy out of the money. But look at the expected move, right? This is saying that Amazon by now until the end of the year is going to expect about a $30 move. Well, this has this up on the high side around 215. Well, if I did that expected move and go to the 215, which is the expected move, I'm only paying $7.25 for something that, if we get this at the money, can pay $16 to $18. So that's a 2 to 2.5 times profit, if I'm right. Right? But you have to be comfortable with, am I comfortable risking $7 with a 78% chance that this expires out of the money and it's worthless? Because the payoff is good. I only have, if I have 2 to 2.5 times profit, I only have to win about about 35% of my trades to make money. It's not bad. Like a 2 to 1, but break even for 2 to 1 is 30%, 33%.
Yeah, I don't know. That it at that point, like, you would do something like a vertical play or something.
I would do.
I don't think you would straight up buy a call.
Correct. What I would do is I would do a debit. I would probably do something where if I bought like an at the money, so let's say I bought the at the money call, which is going to cost me around $19. Okay. Now with that trade, or if I buy an at the money, we're trading at 187. Let's just say I buy the 185. And then against that, I'm saying, look, this is going to cost me $19, Frank. Now, if I go 185 to 225, Here's what I want to ask. Am I willing to pay $14, okay, for a chance to make $40? Is that a good reward to risk? Yeah, like you're risking $1,400 to make $2,600. You also increase the probability a little bit. If we think that this can go higher, I mean, if we get to the highs at 201, or we get to a measure move at 210, look, if we get to 210, that is a $25 move on a debit that costs you 14 bucks. You can still make money on the trade. If we stay where we are, right? My break even is technically 199 right now. So the best way to do this, in my opinion, is if you're putting a timestamp on this, you got to look at like either having higher reward than risk or having a high probability. That's always the trade-off with options. It's either high probability and you typically have a lower profit, or higher profit, lower probability. That's the trade-off. So for me, I'd rather have time work in my favor. That's the hardest thing is, I like Amazon. And I think what would make me angry is if I do something with a long option that I don't time it well enough to make money. So what I'll do instead is I'll use time on my side, and I just collected all this premium up here. And I'm just like, look, if Amazon were to drop a bunch, I'll own it. And I'll gladly own it. If Amazon just does nothing for the next 3 months, I'll still make money. If Amazon goes down by 20%, I'll still make money. If Amazon goes to infinity, I'll still make money. That to me is an easier trade without the frustration. Yeah. We got to go.
James just walked in. He said we got to get off because Forex James is coming on.
Okay. One quick thing for price action. One thing, RBC. All right. Give me 1 minute.
We're over time.
All right.
I wasn't really paying attention, but we're
okay. My fault.
We'll
sorry,
talk about
sorry,
it later.
Okay, sorry, James. And for price action, I see your question. Join my Discord, dude, and I'll let me do something on RBC for you. Okay. You can find my YouTube. I got a Discord link. Reach out to me. I'll take a look at RBC. We're sitting here at all-time highs, so I'm a little skeptical on that. But buying dips looks pretty good. What is this? Metal? Is this right? RBC? Anyway, all right. We'll talk about it offline. All right. Thanks. Bye.
Yeah. We'll talk about it. All right. Thank you.
Yeah. Bye.
Hey guys, let me just share my screen. Forgot to do that before. How is everyone doing? Hope you're all having a good end to the week. So yesterday we discussed quite a lot of things, quite a lot of different pairs. We looked at the New Zealand dollar this week quite heavily, and I was saying at the bottom, basically the support, I was looking for a moderate recovery. We did manage to get that. However, the overall trend of the market is very clearly bearish. So I was saying I was looking for this moderate recovery into a 50% pullback, which we've had. So you can see we've hit this 50% pullback really nicely, obviously due to the US news we had today. And we've seen quite a nice rejection. However, as this was a news move, I'm not going to execute on it just yet. So I'll maybe look at it on Monday. However, I'm not going to start placing trades at the end of the week. That's just not my style. However, I think we could see further downside on this as we see a potentially stronger dollar, although the Fed did sound quite dovish, and it did sound like we will get rate cuts in September. However, I think, in the short term, there's no reason we couldn't see a little bit of further downside on the New Zealand dollar, especially considering it's a pretty poor currency. We're in a double, well, they're in a double dip recession. So New Zealand dollar looks quite nice to get into for some short positions. So we'll keep an eye on that one as things move forwards. Euro dollar, very similar situation. I was quite contrarian on this one. People were saying, back here, I was saying that I was looking to go short. the chat, so the trader Nick chat, was that most of the people were saying that they're bullish, they're looking to buy, they're already in buys. And essentially, the price action did support buys at the time, but I did see some bearish momentum coming into the market, some sellers coming in due to the fact that the ECB was a lot more dovish than the Fed. And I think the rate cuts in September, obviously, they're very, very expected. It's not going to be a shock if that does happen. So I don't really see huge problems going into that, really. So I'm just waiting for a 50% pullback into here so I can then go short. Now, I keep repeating this, but again, there is a credit agricole target on euro dollar for the end of the year, so the end of Q4 2024 at the 1.05 level, which is something to keep in mind. So if we can catch a nice pullback to enter some shorts, it's we could get a 3.35% move, roughly, give or take, of course. I see quite a lot of talk about stocks. I'm not a stock trader, so unfortunately I can't give you any insight into any stocks. I wish I could, but it's just not my asset of choice. So the next one is the dollar NOK. Now, again, I've been speaking about this. This one's a very long-term trade that I'm looking to get into. And it actually may be ready on Monday. So if we can get this bearish weekly candle close, I'll start adding into some positions. And the reason is because the NOK is one of the most undervalued G10 currency at the moment. And a lot of bank reports, a lot of institutions are suggesting that they foresee and they forecast a stronger NOK as we head into 2025. So this will be a trade that we hold into possibly Q2, maybe early Q3 of 2025. So we'll see about that one. The Australian dollar. Now, Australia is sounding quite nice to go short, actually, especially against the US dollar. So looking again for some sort of pullback here. We are consolidating a little bit. However, I don't really like to enter on consolidations because we tend to have quite aggressive breakouts, and I don't want to go short in consolidation to something like this and then get an aggressive move to the upside to potentially meet the 200 moving average or retest this level of support, get stopped out, and then miss the move. So I'm waiting for slightly higher pricing and then a potential move to the downside into the lows around here. So we'll see again about this one. There's no trades that I'm really looking at right now to take. I'll take a look at some of the things that you want in a second. So things like the dollar Swiss and gold. Yesterday, I showed you my euro pound position. This one is messy. So we had interest rates by the UK or Bank of England today. It came out as a cut, which was not quite, well, it was expected. It was mixed. However, it was leaning towards an expected cut. So it wasn't a huge surprise. We did see the initial move to the upside. You can see this red bearish candle here had a huge move to the upside and then a drop. And the reason that the pound isn't seeing as much bullish movement as you may expect with a cut after 7 straight holds is because there's not a clear guidance for September yet. They're not sure. Market participants aren't sure if we're going to get another cut in September or if they'll hold. So we'll see, but I'm holding on to this position for now, although I'm not overly hopeful at the moment. But, we're still hanging on to this 50% level and this golden zone. Price is still technically underneath the 200 moving average. So from a technical standpoint, still quite happy to hold. And again, just because there's no clear guidance for September, I don't really see an issue holding for now. Now I'm in a NASDAQ long position that was moving very nicely. However, we had obviously US news that's affected it quite heavily. So it's coming back down to entry, which is fine. So this is a position building position starter, I guess. So it's very low risk, very large stop. And the idea was to just get into the markets or get into this market and then potentially scale in if we see lower prices, scale in if we see higher prices, and just, scale in as as the market moves. But for now, it's just a low risk entry, just to start with. Next one is Euro CAD. Now, I can't give too much information on this one yet, but if the hint I'll give you is seasonality. Just go and look at how Euro CAD has performed over the past between July to sort of September. Just look at what happens, and that will basically give you everything you need. Now, the yen pairs, I'm still in 2 short positions on dollar yen. I'm looking to add in to a long, I'm in 2 long positions, unfortunately fallen off a cliff, but I'm still looking to add into another long position at the 146 level. Let me just round this out. Yeah, here. So I'm looking to add in at this 146 level. So the first 2 long positions I have are very low risk, very low position sizes. And then this final one down here will be my sort of bigger entry where I go in with a much larger position. And when I say large, obviously it's not large relative to account size. It's just larger in comparison to the first 2 positions I placed. So this one would be possibly a 0.5%, whereas the other 2 are roughly 0.1 to 0.2. So that's something to keep in mind. Australian dollar yen, still in these 2. Again, just sort of letting these ones ride. I'm still pretty bullish on the yen pairs. So dollar yen, Australian dollar yen, pound yen, etc. It's just short-term bearishness at the moment that I'm happy to sort of sit and ride through. So yes, Rajivir, sorry if I butchered your name. This is TradingView. It's free, so you can, no cost, unless you want like additional features like multi-charts and lots of indicators and ad-free and stuff, but you can use it for free. So dollar Swiss, we can have a look at that one. I think it's a half-an-hour segment today. Let me just check. Don't want to overrun. Oh, there's no one after me, I don't think, from what I see, so not too much of a time limit. So dollar Swiss, let's see. I was long dollar Swiss, and what I can do is show you. Give 1 second. Let me pull it up. I can show you this. So again, I've shown this quite a lot, so I'm sorry if you've been here before while I've been showing this. It might get a bit boring, but the reason was because we've had another rate cut and dovish forward guidance from the S&B. Have halted the Swiss rebound. Persistent political risks in Europe and global uncertainties could challenge the Swiss in the near term, while lower inflation differentials will depress the Swiss real valuations in the long run. So essentially, I was looking to go long with a stronger dollar and a weaker Swiss, but clearly that was not a great entry because I entered. It was roughly here, so actually it ran quite well initially, but obviously this was just a pullback. So it was a counter trend trade, which isn't really what I like to do. So it was a bit of karma for not following my technical approach properly. I should have really waited for a trend change and then an entry. It was quite aggressive on my part, but I've still not lost hope on the idea for the long term. It's just waiting now for another entry. We have seen quite a lot of bearishness on this asset, and I was short, so I've been trading this one both ways. But again, I lost on the short as well. So I entered roughly here. Stop was somewhere around here, so it was quite a small stop, quite a tight one, unfortunately, on this one. And my take profit was down here, so sadly missed out on this one. But that's what it is, unfortunately. Let's see, actually, if the dollar Swiss is on the EdgeFinder. I think it was at one point. I'm not sure if it still is. Can't see it on bullish. It's not on the bearish either, so it's not really reading anything. So I don't pay attention to neutral assets on EdgeFinder. I only really care if it's bullish or bearish, because obviously I'm not going to trade something that is neutral. So we can have a look at gold. Let me just go here. So gold, I'm looking for higher prices, to be quite honest. I think as we are heading into US elections, we did also see a slight rise in tensions in the Middle East. So you can see that's what caused the sort of lift off around here. So it was, the start of, well, I guess the end of July, we did see quite a nice move on gold that was driven by some political fears or global fears. But I'm not sure from here where we go, to be quite honest with you. I'm not sure that gold's ready to go back to all-time highs or break all-time highs. I do expect a slight pullback, and then we could potentially come back and retest all-time highs and potentially break through there. But yeah, right now we are sort of testing this level of resistance, and if this candle, this 4-hour candle closes bearish, that would give me a nice sign that we could come back and sort of retest this 50% level, and then see a continuation up. So that's what I would be looking for. So as we go into sort of next week, I may place a trade something along these lines if we can get this pullback. If not, if we do see this continuation to the upside, then the plan of action here is to enter on this retest. So I'll delete this one. So it would be, something along these lines, stop below this little this low here. In terms of a take profit, I don't really like trading all-time highs because I like to have quite clear levels of structure to place stops and take profits at. However, in this situation, I would need to take just a trailing stop approach, which isn't my favorite thing to do because it means managing the trade too much. I like to set trades and just leave them. And the way I would manage a trade is by paying attention to the economics. So if the trade thesis or the reason for the trade changes, then I'll close out, regardless of the price action, really. So having to monitor it and trail stops below previous lows and stuff is not ideal for me. But if that's what must be done, then that's what must be done. Sell now. That's a bold thing to claim. I may do, if we see this candle close bearish, I may go for a very small position, just possibly a 1-to-1 or a 1 to 1.5, just to maximize market moves. But again, that's kind of counter trend trading. It's not my favorite thing to do. But if the technicals are there, just for a slight pullback, I will see if I could trade it, but it's very unlikely. I am in a silver position, so this one was sent to the Discord, actually, but this one's been quite interesting. As soon as we entered, really, it was just a run to the upside, which was quite unfortunate. Luckily, the US news today came in quite good for this position. On a technical aspect, it looks really nice. So we are, excuse me, we are looking at this level of previous support. So it's a very clear sort of break and retest pattern. At the time, I was looking at this fib golden zone, and that's where I entered into a second position. So that's running in drawdown at the moment, but still quite happy with the trade. There's nothing really that's giving me any red flags. But yeah, that's it really for my open trades and watch list and things. So yeah, it's kind of a case of just watching these. I'm fairly sure that Euro Pound's going to hit stops today or tomorrow, just as off the back of the what's it called, the rates that came out today. But that's fine. As I said, I like to put trades on, let them run to stops or take profits, and that's just the way it goes. It's not my problem what happens in between. I think when you're paying attention to what happens to a trade when it's not at like a major level, that's when you start letting emotions take over, and what if this, what if that, and that's how you end up hurting your win rates and your risk to reward, is by interfering with your trades too much. Obviously, if it's part of your strategy and that's what you've tested and journaled and it works properly, then fine, and that's part of a structured strategy. But just doing it, out of I think this or if that, it's just not a great thing at all, really. So let's see if there's anything else. UK 100. So I am looking to go short on the FTSE, and the reason is because I really don't like the UK. I think the economy is going to crumble. I'm not sure when. However, I do see that happening sort of towards the end of the year. So yeah, it's a case of waiting for the FTSE to become at sort of a reasonable level to take a short. I think it might be there. Again, if we can see a weekly candle close bearish, may take a very small short position on the FTSE. It may just be something like this. So it's only a 1 to 2, but on longer term positions, I like to take increased risk. So I may take this at sort of 2 to 4% risk. So it's actually a, maybe a 1 to, well, I guess it would be a 2 to 4 or something like that. But yeah, the UK is just in a really tricky spot, to be quite honest. And I've been saying this for quite some time now, and I'm sure the A1 people are sick of hearing me talk about it. But I just think the economy and the way that citizens are living here, it's just not sustainable. People can't afford to eat. There's regular people, teachers, they're going to food banks. There's a huge energy crisis. Everything's privatized. So, for example, actually, I take the train quite a lot. And the reason I take the train is because it's easier. It's more convenient for me. I'm not sure if my camera was off, but for example, I'm going away for some family event tomorrow, actually. So I was booking a train ticket. And the train that I normally get it used to be anywhere between sort of 30 to 40 pounds. That's fine. Who cares about that? I was booking it today. It's gone up to 90 pounds. So it's over doubled in price. And it's the same journey. Nothing's changed. So it's just small things that you may not think about. But all these small costs are what people have to pay every day to get to work, to eat, to stay warm at home, to pay rent. All these types of things that build up. And there's just a lot of people struggling here. And I think that's really going to come into effect pretty soon, to be honest. So enough of that ramble. So yeah, I'm looking to short basically the UK. So I'm looking to short the pound dollar and the FTSE. But yeah, the execution on that isn't quite ready, and I may have already missed it. So I'm looking for this previous high up here at the 1.31 level. However, we are seeing a really strong move to the downside on the weekly chart now. But this level here just wasn't really convincing enough. If we look back, it just doesn't really line up with anything, which to me isn't great. So I like to buy and sell from levels that have some sort of meaning. And this one to me at the 131 just made more sense. So we'll see if we can come back up there. And again, with the Fed cuts that come in September, or likely to come in September, then that may present the opportunity to see a higher price to allow some short positions to get executed. I live in the UK, obviously. So I live in London. So I used to live in the north, and then I moved to London for work back when I was younger, and I just haven't left since. But it's difficult, I wouldn't, if I was still working where I worked, I was 19, and at the time I was on about £30,000, which is good, especially when I was 19. That was really good money. But don't get me wrong, I wasn't living crazy. In London, the rent prices are nuts. So I was living in just a house share, but it was low cost. I think I was paying about £500 a month for bills and rent. So I was living quite okay for a 19-year-old in London. But if I was still there with that salary, I don't think I'd be doing well at all. Sorry, when I say there, I mean the job. With that salary, it'd be awful. Bearing in mind that's above the average salary already in the UK at 19. The average salary I think is about 25,000. So that's just to put into perspective how difficult things can be for the average person. How old am I now? 26. So pound CAD. Sorry, I know I went off in a bit of a tangent there. I've got a bit of a habit of doing that, but I think having an understanding about the countries and the way things actually are for regular people is very important, because it's all very good and well me looking at, for example, New Zealand and saying they're in a double dip recession, but I don't live there. I don't know how people are living. I don't know what it's like to be there and spend money there and have an income and things. So I can look at it from a data perspective, but that's just doing what all the other economists are doing. Whereas I actually live in the UK, so I have a feel about how things are, and I'm experiencing it firsthand. So I hope that makes a bit more sense. Last thing I'll say about this is if you look at the majority of reports that come out from institutions, a lot of the time reports that will be covering the yen or the pound or the dollar, they'll be written by people from that country or that live in that country. And there is a reason for that. No, that's obviously not in every situation, but anyway, we'll move on. So pound CAD, let's see. I actually don't mind where price is right now. So this is not ideal. However, it's not too bad. So we have this level of support through here, which could be quite a nice break and retest to the upside. This level right here would be a 50% pullback, but the 200 moving average seems to be holding quite well. So to me, I'd be quite happy to go into this, but the stop would need to be quite tight, quite large. So it needs to be just below or just at this low here with a take profit up at the fib extension. Excuse me. Now, I know I was saying I'm bearish on the pound, but I think short term, the pound actually does have quite a lot of steam. So for the next sort of 1 to 2 months, I don't really see any problems with the pound coming up. But obviously, again, that'll kind of depend on the rates that come out in September. Cost of living increase here in New Zealand. Yeah, exactly. So if you're in New Zealand, I'm sure the economy and the New Zealand dollar makes a lot more sense. The way it moves and what it does, it makes a lot more sense to you compared to somewhere you don't live. So whether it be the dollar or the pound or the Swiss, something like that. Thrilling history. I've already covered silver, but we can take another look. So I am short silver, basically just off this level of previous resistance here, turn support. And then we've now come into a downtrend, creating lower highs. Looks like a break and retest. Didn't quite respect this fib level. However, this move here was obviously a risk aversion move. So when we had the Middle Eastern tensions rising a little bit the other day, we did see commodities start going up. So we saw oil, gold, and silver start rising. And then we had US news today, which has given us a little bit of a push to the downside on silver and gold. So that's my view at the moment. Yeah, I should have really waited. And earlier, I don't know if, maybe people weren't here, but I was saying earlier, I don't really like to enter into consolidations. And this is actually a great example why. Because when we have a consolidation, it's not uncommon that we see quite an aggressive move out of consolidation. That could be in our favor, it could be against us. But that aggressive move out of consolidation, often I don't really like to be involved with. I like to see the continuation first and then a pullback and then an entry rather than this sort of consolidation. But, to counter that, as I said, this consolidation here had an aggressive move to the downside. So that one would have been great. But it is what it is. We're in the position, so we let it run. Let's see. Let's have a look at the indexes. So the dollar's moving higher. The dollar's doing really well today, actually. Yen is running out of steam, it seems. So as I was saying, I'm still bearish on the yen overall. However, I do see potential for further upside. We are at this level here, so it's quite a nice weekly level. So we can see we had a low formed here, used as support, broken through, and now, from just a technical look, this could be a break and retest. I don't really like saying it's a break and retest because obviously this is basically 100% dependent on what news is coming out of the BOJ and the MOF. But, so far we're seeing quite a nice rejection off this level. So this could be a turning point back to the downside on the yen, but we'll see. We are also seeing this daily candle have a little bit of indecision to favoring the downside, but nothing too crazy. The pound heading to the downside, Australian dollar seeing downside. So it just seems like the dollar's doing pretty well today, outperforming a lot of other currencies. Actually, the Swiss is doing really well as well. Interesting. But yeah, if you guys have questions, please feel free to ask. Shorey, I'm new here and it's refreshing to hear someone speak about trading like this and not crazy strategies like FEG, silver bullets, and all the noise we see from other traders. Yeah, so I really don't want to go off on another tangent because I don't know if you guys find it boring or not, but I think there's a very simple way to look at trading and strategies and things, and it's why do strategies work and how do them, well, sorry, I should rephrase that. Why do the markets move? And the markets move very simply because of money coming in and coming out. So you've got to think, is money coming into the market because there's a 1 minute order block or an FVG on NASDAQ? No, it's not. Money's coming into the market because there's inflation, GDP, there's all these economical factors that run the markets. And when large market participants are looking to place trades, they're not looking at technical analysis. They're looking at what's the current data for each economy? How can we capitalize on that data? Is that data going to change? Is that data going to change for the good or the bad? And they essentially assess everything. So why would you go against what's proven to work is the point. So let me just pull something up for you quickly. So this is a bank report. So we get these in the Discord every day. And this is basically, we get hundreds of these basically every month. We normally get anywhere between 5 and 10 a day. So you can see it's all economics. There is no mention of price action or technicals. The only real thing that most market participants use on a large basis is moving averages, trend lines, and oscillators, and that's about it. I was long AUD NZD yesterday and got wiped out. Support didn't hold. Yeah, well, that's bound to happen, to be honest, with the current situation with the Australian dollar. What's better in your view, breakout trading or breakout and retest, since both have merits? To be honest, both do work. So I used to have an EA, which is expert advisor. So it was a robot that would trade for me, and it would trade breakouts. So the rule was, if it finds so a very similar situation to this. So if it finds, I think it was 8 or 10 candles that are equal in height, give or take, I think it was 2 pips, something along those lines. It was a long time ago. And then that support level is broken, then it buys or sells, obviously, depending on which way. And that worked, but it was just not worth keeping open because it would fail in situations like news and sessions. So it would normally work quite well in London session, then New York session it would break down. News, it would also break down. So it was a bit unpredictable. It worked enough, but it wasn't something I wanted to keep going. However, breakout and retests are basically what I trade now. So you can see we're looking for this level of support. We've seen the breakout and looking at this retest to the downside. And the reason I like retests is because we have shown that there's buyers in the market or sellers in the market to push price below or above that level that I'm interested in. And then we come back down to retest. And a retest normally, obviously, if you wait for a confirmation and you have like something like a fib or a moving average or a engulfing candle, something else to layer on top of that to confirm it's not just a false breakout or whatever you want to call it, they can be quite good, quite lucrative to trade. Can you look at US30? Yep. Do you think GU is set to drop at least? I'll have a look at GU in a second. I'll also have a look at the dollar Swiss in a second as well. So US30 obviously was impacted quite heavily by the news today. But I would still like to go long. I mean, if we look overall, we still have the 200 and the 50 moving average holding quite nicely in this uptrend. They're fanned out. I would like to see a pullback into this level somewhere around here. So we've got this low, obviously respected this 50% level. As I keep talking about that level. It's quite a strong confluence to use. We also have the highs down here, this old resistance. And actually we do have, if we just extend this a little bit, we've kind of got this level here as well. So previous highs. So I'd like to go long from somewhere around here. In terms of a target, I'm not too sure. So I'd have a tight stop, I think, just below this 50%. which isn't ideal. Normally I would go below, so something like this. However, I don't really want to have such a large stop. So I think I would possibly just have a stop here below the lows, below the moving average. And if those are broken, then fine, the trade idea is out of the window technically. Take profit up at this fib extension, which is the negative 0.618 level. So that's how I would approach it. We also have a bullish reading on the EdgeFinder for the Dow, which I can show you in a second. Let me just log in. That's strange. It won't let me. I think my EdgeFinder might be frozen. But you can see easily here, Dow is bullish. Got a score of 8, so that's also a nice confluence to use. So yeah, Dow looks quite nice to the upside, but the way I trade, I would need to see this this candle close bearish, and then I would need to see a bullish engulfing candle. So really, the entry would probably be a bit higher, obviously to account for the next candle close, which might be bullish, and if it is, that's what I'll enter. So I'll look at GBP USD again. So you're talking about which level were you saying? The 1.2635. Let's see. I don't see that level being hit. And the reason is because we've got the daily 200 moving average, which is above this level now. Let's just see. We are seeing a little bit of a rejection at this golden zone as well, which is also in line with these previous highs. So from a technical aspect, I don't really see that happening. It may come down a little bit further and it may tap into this range, sort of this area that you mentioned, but maybe not that exact level. So we'll see. I think it will depend on how this daily candle closes. As I said, I do see the pound as having a little bit more strength at the moment, especially, a little bit more weakness at the moment. So it's definitely possible, but I wouldn't bank on it. Fundamental take on the dollar Swiss. Let me pull that up. I'm not sure if I've got a fundamental take. Dollar Swiss, yeah, I do. So I've read this before. I'll read it one more time. Another rate cut and dovish forward guidance from the S&B have altered the Swiss rebound. Persistent political risks in Europe and global uncertainties could challenge the Swiss in the near term, while lower inflation differentials will depress the Swiss real valuations in the long run. But this is a 6 to 12 month outlook. So keep that in mind when you're with that. Just take it with a pinch of salt for now. I don't use the ATR for an SL. I just use market structure and the fib. Andrew Bailey literally telling off Labour like a child who spends too much money. It's so sad to see. Thank goodness interest rate dropped today so I can sell my house and move to Italy. Yeah, I'm looking to get out of the UK ASAP, actually. Just waiting for a few things in personal life to line up, but I would like to move to South Korea. So my girlfriend is looking to become a teacher there, to teach English in South Korea. So that would be amazing, actually, for me to move there, to get out of this horrible country. But I think we'll call it today there. If there's any final questions, let me know. Last thing, I just want to do a little self promo here. The Elite Traders Discord was $100 a month. We've lowered it down to $49. It's a little promotion we're doing. So if you guys want to join that, if you want to come and speak to me in Discord and join a bit of a community, feel free to do that. But I think we will end it there. So I appreciate you guys as always. You've been a great chat. You won't see me next week, and you won't see me tomorrow. So I hope you all have a great week ahead. Enjoy your weekends, and I will see you all very, very soon. Thank you for tuning in.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.